Igor,
There
Richard,
you go.
nice to see you guys again.
Hi, Jannie, Igor. You guys too? How's things?
Yeah, not too bad, thanks. Not too bad. A very interesting morning on Forex this morning, and the NASDAQ.
You
Pretty sure you can
disappeared
see.
from the screen, Jannie.
Did I?
Just the voice. Now
There
we
we go.
can see you. Okay.
You're back.
Do you feel better, Igor?
Yes.
Okay, so what I was going to say. Oh, yes. Yesterday, okay, I didn't take any trades. Yeah, I think I did mention it can potentially go to one of the pivot points. It did bounce against it. Today, we are having an inside day so far. Obviously, the market started in 15 minutes. We are trading below yesterday's high. So it will be interesting to see if it's going to challenge yesterday's high again. It's been already there pre-market, very early this morning, actually. This is like Asian session. So we'll see, but we've got this resistance area in the way, and we've got the support level just below that in this range here. So, an opportunity will present itself typically when it's like close to either of these levels. It's either going to give us a breakout or reversal, but we will see it based on how the candles actually close, right? So as you know, I wait for the candles to close and then I determine my bias. Once that has happened, and then I'll just move over to the 1 minute and see if I can find anything. The 1 hour time frame is a bit more rangy. Yeah, you can see that we had that pull to the upside, and now it pulled down, and now we're just ranging to the side. And I think on the NASI on the daily time frame, we did reclaim the 200 EMA. So that's why I'm saying it will be interesting to see if we're going to challenge the yesterday's high, and if price action is going to tell us that, yeah, we can probably expect this to go higher or not. And that's going to be evident on the smaller time frames. So the smaller time frames is going to be crucial, okay, to telling us what to expect here. But so far, it looks like a pretty, not a very big wick to the upside. It could be a slow day. We'll see. It looks a bit rangy to me at the moment, but hopefully the market open will give us a better idea of what we can expect. So that is the NASDAQ. The other one is the pound US dollar. And we are moving lower towards this support level here. And this support level is the reason why that's significant is because that's also the low of the daily range, right? So if I just go to the daily range here, so the lowest point and the highest point, that's your range. And yesterday and the day before and the day before that, we were pretty much trading in the middle of that range. And it was just a horrible looking chart. As I said yesterday, it was just not good, clean price action and just not a good time to trade. You're much better off waiting for a key level and then trading off that level. And obviously, we need to see what happens if it does go to this level. It could go lower. We'll just see how price action behaves there. And for an entry, you also need to look at multiple time frames. Okay, you can look at sometimes the reversal will be obvious on the 1 hour. Other times it will be more obvious on the 4 hour, and so on. Right. So the multiple time frames is always a good idea to have a look at. And then if you combine that with, if we look at the dollar index found support on the 61.8 Fibonacci retracement level. There was that big drop. This is the weekly time frame, and the week after, this body of the candle closed inside that wick, and that's always a bullish sign. And then the next candle completely engulfed this bearish candle. So this is bullish. Okay, this is definitely bullish, and I'm expecting it to pull back potentially to the 105 area. So if that's the case, then that lines up with the bearish bias on the pound US dollar as well. But it's not just that. I don't know if I've been through everything else that I've looked at to help me to determine this bias. But I basically start on the monthly time frame. And I drew Fibonacci levels from on the monthly time frame candle itself to help me to determine if this candle does pull back, how far can it potentially pull back? And I used the Fibonacci levels for that. The second thing I was looking at is the ATR. So the ATR, if you just count the low, the pips from low, pips from high, from high, that's 455 pips with an ATR of the 14 ATR is 420. So it's actually exceeded the average size of the candle you can expect. That it in itself doesn't tell you much, but it's an indicator. Just like a moving average or any other one of your indicators, it's an indicator, and you are trying to build a case in terms of what's more likely to happen next. So yeah, we've already reached the potential of the size of the candle that you can expect over the last 4 candles. That's the first thing. And then if you go to the 1 hour time frame, we had this very, very strong bull run. This is in the first 2 weeks. And then it tried to make an attempt for a breakout. So you're not going to trade that. Maybe this pullback. Let me just draw this line there, right? So you get that breakout and then the retest. That would you take in that trade? To be honest with you, there's nothing wrong with taking a trade there. But the monthly ATR would make me go, if there's going to break out, how big can it potentially be? Because we've already reached the potential range for the month. So that should keep you from taking these, or expecting another massive move to the upside. Not for this month anyway. And then this candle here, you can see it made another attempt. It failed. This was FOMC, right? This was the FOMC candle. And it just couldn't break the high. I mean, it made a little bit of a, not really, but it is FOMC, so you can expect a bit of a move. But it just failed, completely failed, broke the neckline there. And yeah, you are clear. Yeah, for me, your structure is completely not what it was. Right, because now you got that nasty range around the 200 EMA. We had 2 pullbacks, and I'm pretty sure, just by looking at it with a naked eye, that was probably a 61.8 Fibonacci retracement. If I just draw it from there, yeah. So it hit the 61, hit the 61 again, but the second time it hit the 61.8, it made a lower high. So if you look at those things, just what I've mentioned, those are all probability stacking for a short opportunity, for not necessarily opportunity, because it's very, very messy. It's difficult to trade when it's like this. Arguably, you could have probably went short at the 61.8 for the second touch. But if you are going to try, look, this is now, you've built a case for a short. Now you need to try to do the opposite and try to build a case for a long. And because remember, you are just like trying to figure out what's more likely to happen. Is it more likely to go up or more likely to go down? All you do is you stack probabilities. You just stack a lot of probabilities. What's likely to happen next? What would your case be to go long here? What would your case be? And the only thing really is if it breaks that high, right? So it doesn't tell you anything, because I can't think of anything else. There's no more range left on the monthly. We've already reached the range there. We are in an overall downward slope, right? And I understand there's a very strong pivot there, so I can understand why you would say, we can potentially go higher. Yeah, okay. But this is the monthly time frame. So when you go to the monthly time frame, you really just want to see, you just want to pull some really important information from, like the ATR. What else? The ATR. Also, like things like FIB retracement levels. Maybe if I just draw another line, yeah. Let's draw some FIB levels here. It may look messy. Okay, so even on the monthly, it's like it just pushed through the 61.8 and now it's pulling back. So these are all, you're stacking everything without having you go in neutral. Okay, you go in neutral and then you look at the charts and you look at everything and you try to build a case for, what's more likely to happen. And based on that, I just thought it's more likely to at least come down to this level here, the daily range support level, and potentially even if it's going to break this is the next support level, the 38. It could go lower, 50, 60, 1.8. Obviously that's easy to say, but how do you know it's going to find support there? You need to look at multiple time frame analysis, and this is, you've got one thing, and that's so far it's the 50% or the 61% Fibonacci level, but it's not enough. It's just one thing. You can't just look at pivot points. You can't just look at an engulfing candle. You need to build that picture. So anyway, yeah. So I think for now, I stick to the levels that I've identified on Monday, I think it was, that it could go down to 1.286 or 1.284 at least, and then we'll see how it behaves at those levels. So
that's an hourly chart you got there now, right?
This is the hourly chart, yeah. So if we have a quick look at
quite a lot like a bending top-looking formation, like around.
Yeah, but I think the picture now becomes more clear. Yesterday it was very unclear. The day before I was definitely bearish. Yesterday we had this pullback back to the 61.8 fib level, but making a lower high. That's very bearish. You ignore all longs for sure. This is not a place.
But I think wasn't that the level Igor was aiming for? I believe.
Yes.
For the day trade.
But maybe so did you change your mind when you saw it made a lower high?
No. I just watched the levels. So for the British pound dollar, 1.2860 is the next level of support, and the next is area around 1.2705.
Okay.
So
we'll get your thoughts on the pound US dollar and the others in just a moment. I just want to show also then on Bitcoin. Bitcoin, I have an overall bearish outlook. I know there's been an uptrend lately, but this I read this as a correctional wave in a much broader downtrend. Okay, so at the moment, like, would I short this? Would I long this? Well, I'm aware that we in this channel, so it's a bit, it's almost for me very similar to the pound US dollar trade. You see, you get this little channel, but you in this much wider range from there to there. At the moment, we are hitting the 61.8 Fibonacci levels. It's struggling there. So my bias has been like my general bias, not position taking, not for trades. Just my bias is short. Does that make sense?
Yeah.
And then So when you look at the bigger picture here, downtrend, we've been in an upslope, or uptrending channel, for the last, since the 12th, so for a while now. But now the next question would be, what needs to happen for me to change my bias? What would need to happen for me to change my bias from short to long? And the answer is, it needs to, first of all, break this downtrend, and it needs to get outside of this channel. So this cross here, you want to see it above there. And then do you just take it? Well, hopefully you'll get a bit of a pullback first to a decent level, and then along. But that's not in play yet. Okay, at the moment we are finding very strong resistance. So it's all going to depend on what's happening now. So there's no trade, there's no setups, there's nothing like that. It's just like looking at what's price currently doing and what you would like to see. But the other scenario is obviously if it breaks this channel, it can go low to this. Like if I just zoom out here a little bit, you can see this descending wedge. And if it does break out there, then it could go down to, why can't I see it now? You see this support level here. It could go to the support level here. Okay. That is 74. Yeah. But okay, so that's the one scenario. But as I said to you earlier, you need to look at both sides of things. You need to look at, okay, so that's the case for, it could go lower. What's the case for it could go higher? Well, I just mentioned what I would like to see, but that's not what's happening right now. What's happening right now, if you look at the monthly time frame, you can see that we are having this very interesting candle with very big wicks to both ends. Okay, but if it does close as a bullish candle, then that just tells you that, well, for this whole month, it definitely, there were more buyers than sellers, if you will, right? It closed bullish. This is a bullish candle on the monthly for sure. On the weekly, the same. We have this little pivot, and it came down to it didn't quite touch it. I would like it to come lower, but I'm just starting to think that it may just be a little bit too late for that. So do you understand? So it's like if you look for the case for a short, but then look at the other side and then balance them out, and then if you stack the probabilities, which one is more likely to happen? And I think based on where we are right now, it looks more bullish, but it's not the right time to buy it because you're having contradictions on smaller time frames. You need like the multiple time frame analysis to give you a better idea of is now a good time. Oh man, I've got something like this up. Okay, so it needs to kind of get out of there because it can still reverse. There's still a few days left. There's still we've got today and then tomorrow and Friday, the weekend, and there's Monday. So a lot can happen. Remember, every day, 24 new 1 hour candles gets added to the chart, and it can change the picture. So just wait for clarity. It's not clear at the moment. On the pound US dollar, we could start to see something a bit more clear. We eventually moving out of this really horrible looking chart. So now we're getting to interesting levels. So we'll see how it behaves there. Okay. So anyway, that's the pound dollar, and just a little bit on Bitcoin and the NASDAQ. And I think we're 2 minutes into the session. So we'll see. We don't trade the first 15 minutes. So we'll see if we get any opportunities. If we do, I'll take the screen over. So over to you guys.
Cool. Igor, you want to have a stab?
Okay, no problem. Just a little bit to show the fundamentals first. I'll go to the calendar. Okay, so today the major news for me was consumer price index for British pound. We got a little bit disappointed results. And of course, British pound just went down after the news and a couple hours after that. And this was I think the end for today. This is maybe the most important news that we can monitor. Of course, I'm watching, of course, tomorrow final GDP for US dollar. Of course, there is a chance that we will watch the previous quarter because of the stocks and everything. Maybe the results can be a little bit optimistic and better than expected. But like I said, all this month, all these GDP reports didn't make any push in market. So I will not take that a lot in calculation for intraday sessions, only for the maybe longer swing trades. So this is the thing related to the news. I watch a lot of news. I think that one of the articles that most people read a lot is about US. I think that we have here in the news. This is that news related to the US consumers don't consume. A recession could be presumed. A lot of talk I watch on several websites about that US consumers are not as used to be, and that there are a lot of signs and text and sentiment about recession in US, not just because of this Trump tariffs. So this is the rumors that we can find on the internet, and I just put them little bit as a signs just when I watch the US dollar, because the US dollar, I will just show that just because of all these later chart that I will share. The US dollar is little bit in move higher than for the previous day. Just a moment, yes, like this. So as we know, I watched this 105 level because it's in the middle from the high of the last year, and I'm watching just to see and this is the question that we ask ourselves last 1 week: is this the just correction that we had in the last 2 weeks, or it's a new bearish trend? And this is the question that I repeat to myself and watch the chart. This is the pitchfork for the last year. I took the low and the high from the last year to draw this pitchfork, and I'm watching. So it's a really strong push down, but right now it's tough to tell is this a bullish or bearish. For me, I'm still bearish. I'm using my relative trend index trend line. It's still bearish. Maybe we can broke this line, but I just wait to see what will happen in next days. But this movement from the beginning of 2025 up to date, the first last 2 months, we were very bearish in the US dollar. So this is very important for all other currency pairs, but we are in some zone that I need to be very careful what can happen. And now when we have this, I can tell that just the mixed fundamentals for everything. I can just show some my stupid trades and a lot of things that I had today. I will just show you right now, just to change the screen, and I will tell you what I tried to do today. It was a little bit foolish, but I get it out. But this is not the story. So I will just show first the British pound dollar. Yesterday, I talked about my trade.
Sorry, Igor, we can't see your screen.
Your screen just disappeared there.
Yes, here.
Oh, there we go. Yeah.
Okay. What is the problem? So I had a yesterday setup for today. My setup should be to try to buy near to this trend line. But what's happened? The first thing that happened is I think it was around the British Open, the trend line, relative strength index, was broken, and after that, I didn't want to go long, and of course, the bad results of CPI, Consumer Price Index, then for British pound, and all of that stuff. So I didn't want to go to buy, of course, and that what's happened. And I will tell you my stupid trade, and I can maybe show you that trade because I recorded stupid trade, because Jannie, yesterday you recorded a few trades, and I recorded very often, so why not to share to just the traders to see how sometimes we can make mistakes. Okay, I will tell you just my mindset before I put the video. So I have statistics that looks like this. If we have a market structure that is, for example, British pound is long lasts 3 months, and I believe that on the longer scale can be long more, maybe a couple months or 1 month or something like that. In that case, I watch the news and the inflation reports, whichever inflation report, especially Consumer Price Index. What's usually based on statistics happen? Price just drop around the 50% of daily average true range. It's about 50 pips. And usually when price drop 50 pips after the news as a catalyst, then we just go again to the the state that we were before. So I had a lot of examples how these inflation reports we can play sometimes, and I watched that, and what I saw in that moment was this level. It's around the 50 pips before the news. News were like this here. There was the news, then the price dropped, and it was this level. And I just watch for that level, and I enter into trade. And I will just to show you, just to see that trade.
Oh, to go, you mean to go long or?
Yes, I want long. It was a counter trend trade. It was not smart. I just wanted to catch based on statistics. It was not smart trade. It's not a setup, but I wanted to make mistake. And of course, I just want to show you, just to present the whole screen. I will just do that entire screen. There is an option here. Yes. Okay. So this is the trade that I will show you.
Just remember, we can't hear the sound from the video. I learned that the hard way.
Yes, yes. There's no sound. It was a silent.
Okay.
So look, this is the moment. This is the moment. Okay. So the price just reached that level. And on 1 minute chart, I saw just the opportunity that the price reject this level. I entered in this trade on one of my accounts. I put a stop loss just below our support level that Jannie and I very often talking about, and I put yesterday high as a target, and it was this situation. And I will just speed it up just to see. And there was a price rejection in that moment, and the price started to go up and going up because it's a really strong support. And I just want to show this. This maybe is the right moment. I will just stop this to see. So how usually I see this pattern very often when we have this situation, inflation report. First, price drop very, very strong. Then on the first support, it's a 15 minutes rejection. After that, another drop, and then start to go up. So I have based on my statistic, I have a lot of that experience with inflation reports. So it was like from the book. We just stop or just target this some kind of the first important price level, and I enter into trade, and I think in one moment I had a 20 pips profit, and in that moment I watched the euro dollar. The euro dollar was bullish in that moment, so all US dollar currency pair on intraday level were bullish in that moment, and only British pound dollar were bearish because of the news, and because of the market structure, because important price level, because of the huge drop. I wanted one little bit risky counter trade, and it was good in the moment. 20 pips and everything were fine, but there was a problem there because price just started. Okay, just to go away from here. Okay, it was a price rejection. One time we went up to the trend line, then price rejection another time. We almost went to the trend line, and then we broke this level, my entry point level. Now we are again around my entry point level. So this is something that, like I said, it's not smart trade, because overall, if I watch 4-hour chart, one chart, and 30 chart, this is the bearish move. It's a really bearish move. So there is no problem with the bias is bearish. Everything looks like bearish. I made this trade based on my statistics and based on the very important price level where I knew that there would be a rejection. So this is not advice, especially for beginner traders and for good traders too, it's a little bit stupid trade, I need to admit. But like I said, right now I am around my entry point. What I will do, there is a high probability that I will close my trade after this session, but I didn't close my trade. So I'm still ready to see what will happen here. Just because of my statistics. So my statistics that I have is so I cannot so accurate, but it's a more than 80% of the time that after inflation report we have a bullish market structure. That price is going down, reject, and start to go a little bit up. And I know that it's a little bit, when I watch the charts and do a technicals, it's not smart move. But I did this just because of my statistics.
No, look, I mean, if you followed your rules and it's one of your like playbook trades, then I wouldn't say you've done anything wrong. I wouldn't call it a silly trade, as long as you followed all the rules. And
yes, I just want to add why I'm talking about stupid trade, because one rule, I broke one rule. My rule is to always follow on 30 minutes my trend line. My trend line of 30 minutes is broken. Now we are below this trend line. It's a bearish move. It's not bullish anymore. And just because of this rule, I'm talking about my stupid trade. Just because of this rule. And I will just, like I said, maybe I will not wait to touch the support. Maybe after this session, I will close my trade if I see that we are at least 2 hours below this my entry point. Because if you're so long below my entry point, we will try to touch the next support, usually just about because of my experience. However, if we just push higher, then okay, but in some moment I will put my trade to the break even, because I don't feel comfortable when I watch this chart like this. Because what I expect when I do this kind of trade is that after inflation report, I want a large movement again to be bullish. I don't want these slow burning movements that I have right now. I'm not comfortable. So I will wait maybe 1 hour more, and after that I'm closing my trades if I'm below my entry point. Even I make a 10 pips loss, 5 pips loss, 15 pips loss, I will do that, because I have a rule: when I don't feel comfortable, my trading is off. So
are you still? You're not still in the trade, or are you still in the trade?
I'm still in the trade. I'm still in the trade because when I see right now there is no so strong movement downside, neither upside. So if we are nowhere and I'm around my entry point, I want to wait a little bit more, because we are really close to my entry point, and I just want to wait a little bit more to see. But right now there's no movement upside, downside, nothing. This is not good.
But you don't feel confident about the trade.
I don't feel comfortable by my trade. But
why don't you close it?
Like I said, I want to see 1 hour more. 1 hour more. Just to be clear, to see, because I want to see how will trade react after 1 hour after the US Open. So I like to see that, and that reaction will be crucial for me. So I will wait. Maybe on the end of this session, I will just make some comment about this trade. So, and my final decision. But this is the today move. The euro dollar, for example, the story is the same. We are in bearish mode. Just the trend is a little bit clearer than we have when we talk about British pound dollar. So this is maybe one more moment that I can think that all major currency pairs are weak against the US dollar right now. But like I said, there's no strong movement downside neither for euro dollar, so I will wait a little bit more. And now this is the very interesting thing. My bullish Aussie dollar long-term trade, as you can see, today candle is still bullish. So this is the sign that this showing even the US dollar is so strong against the euro dollar and British pound dollar, Aussie dollar with excellent fundamental data, excellent GDP, excellent price action on the daily chart is still in bullish mode. And this is a little bit strange, but I really like this kind of trades, because when some Forex pair can fight when US dollar is stronger and can fight and maybe close this daily candle maybe to be bullish, this is the sign that this is really, really strong currency pair against the dollar. And if US dollar start to go down, I think that Aussie dollar will be the strongest one. So I believe in that, just because this strength right now. So I just monitor this trade. I'm still in this trade. And
go Aussies.
Go Aussie. So go Aussie. And I have a trade that I opened today. And I will just show the setup. I talked about that setup yesterday. And I said that I will enter in this trade if I see on the 30-minute chart trend line breakout. And the trend line breakout was, just to make it here. Yes, it was here. And you can see it is the almost the same spot in the moment when we touch the channel trend line from the upside. So I will just go back to see. So this is we broke the channel, then we just have to pull back down, and this is the moment when we touch. And this was the perfect point to enter into the trade. So broken relative strength index of 30-minute chart, plus at the same time we touch, it start to go up. And what's happened? I was driving my car to my home and I didn't take this trade. So this is the typical thing. This is the typical thing.
Those perfect trades you never around.
And what's happened? I tried to chase, but of course I didn't chase in a crazy way. I wait today to see the pullback, and I enter into the trade around this level, 150.15, because I realized that the market will go up in some moment. I have recorded that moment of my trade. I will just show you on the screen, because it was the okay. We are still here just to show. Yes, this is the moment. So I miss this opportunity here. So I wait to my stop loss to be just below the last swing. And in this moment, when I realized that there was a small pullback, but the price will continue to go up, I just made the trade. And yes, this was the trade. I put a little bit a lower risk, because I plan, like I said, a little bit higher risk reward ratio, and at the same time I want to hedge, because I have Aussie dollars, so I want that orders to be very similar with the position size. So this was that I enter into trade, and like I said, I want to target 100 around 800 pips. Another optimistic trade.
800. Like over what time scale? Over what time scale do you think?
I want a high. I want a January high.
A January high. So you got
January high.
So this is a very long-term trade then, right?
This will be very long, because we broke that channel. That was 2 months channel, and I want to keep maybe my trade 1 up to 2 months, just to reach this high target. It's a very, very optimistic trade, but I realized when I watch US dollar, Japanese yen, what you see, there are really long legs. You have bearish, bullish, bearish, bullish, bearish, bullish, and I realized the Japanese bank from the last year started to make very often intervention in the market. Usually in the past years, they didn't do that, but they started to do that. And it's very interesting for me because whenever they do that, they make some kind of the movement. So, for example, I think this is just to see the date, because I remember, yes. For example, I remember that last year in July, a Japanese bank started to make intervention in the market, and they publicly said that in the newspapers everywhere. And look this, we had a whole year, 7 months strong bullish trend for US dollar Japanese yen, and then in just 2 months huge drop, just because the bank make that intervention. And like I see right now, this is the up down move, and maybe we can see the larger move again. So I don't know. Of course, this trade is experimental trade, so I will just monitor what will happen here. But this channel, this is the 2 months channel, is broken, and Japanese yen is in the bad shape based on fundamentals. So we will see what will happen. I hope that we can go higher. However, like I said, it depends on the US dollar. If the US dollar start to go down again, I don't know what will happen with this pair. So we will see. Maybe I will put the trade on the break even when I make at least 100 pips and wait to see what will happen. So this is the trade that I monitor and try to make something from that. So right now I have a Aussie dollar, US dollar, Japanese yen, and stupid British pound dollar order. So we will see. We will see. Will I close this intraday trade? Because British pound dollar is really intraday trade. It will not be some longer term trade, especially because of this baby steps moves. So
yeah. So sorry to interrupt, but there was a massive drop on the NASDAQ. I was watching it and I nearly interrupted you.
Please share the screen. I will stop my screen.
You spoke about recording trades that does not work, but here's an opportunity, and this is not the first time it happened, where there's such a beautiful opportunity. Let me just quickly, can you see my screen? I can't even zoom far enough back. Okay, it's not showing.
Are you thinking about going long there?
No. You
want to pull back?
No. What I'm saying, yeah. See, that was the breakout.
Yeah.
But I never trade the breakout. I trade the retest, and sometimes it just doesn't come back, and then I miss out on. I just miss those opportunities. And there was another example on this day. Yeah, I think I mentioned. Oh, come on, really? You load data now? There was another opportunity where it also just took off after the open, and it just gave me nothing. I'll show you now. Oh, damn it. Yeah, this was the opening candle, and it just pushed up all the way, and I didn't get any entries. It just didn't come back. So I missed
like my crude oil trade last week Thursday, same thing, and on the ES, just lifted off.
Yeah, so those ones I miss out. But if you are going to just take the breakouts every time, you're going to struggle. Okay, you're definitely better off waiting for a retest. It just didn't. So this is always difficult to watch. It's always difficult to see. Like it's like you don't know. You don't know it's going to be a big move. It's only after the fact. It's only after the fact that you know it's going to move, because you don't know. Right, but if you get your entry, I wouldn't take that big move anyway. I'll just go for 1 to 2. So, but anyway, I just wanted to show you that.
Same things happening on the ES, obviously. Although it's a bit of different price structure. Can I show my charts quickly? Unless you want to.
Yeah, I just wanted to. I think we have a. Yeah, I think, Igor, if you can, I think we had a question about the pound Japanese yen. Is that something you trade? I don't know if you want to bring that up and just have your thoughts, and then I'll maybe add in on that.
Okay, so I can share the screen about the Japanese yen. What's happening?
No, it's just
Just to see.
So we basically at yesterday's low now. Well, close, very close to yesterday's low.
I'm blasted by that drop.
So that little the close above the 200 EMA is now. This is the thing about the 200. Just because you close above it doesn't mean now you're bullish. This is where it's going to start to get interesting. But anyway, sorry, Igor.
So when I look right now, it looks completely the bearish trend when I analyze like this. Now my brain start to think about fundamentals, because if I know that yen is weak, then there is a chance for the British pound to make a push higher. Technically, it's a bearish. Technically, it's a really bearish move. Even when I watch upside here, I can see this bearish trend. If I use the relative strength index indicator, I will just put it there like this. It's the same story. We have a bearish move here. The only thing that I didn't try, and maybe I should, is to try Ishimoku cloud, just to see how that looks. Because a lot of people that trade Japanese pairs, they use Ishimoku cloud, and that can be really, really interesting. I will just find it here. Just a moment, Ishimoku cloud.
Clicking. That's some serious clicking.
Yes. Just will I ever find this indicator? I will just try to see from this.
Sorry.
I will just find Ishimoku cloud. I will just put it on the chart just to see how that looks with this. So yes, it's just like thought in my mind. Even I didn't see this. We are in the cloud, so nothing is completely sure. So there is a chance that we just to check on this way. On 4-hour chart, we are above the cloud, and in the we are. This is the tricky one, because we are still in the cloud, and this based of the Ishimoku analysis above 193, we are still bullish. It's a little bit like I said. When I use different indicators and when I watch naked chart, I see as a bearish trend. But here I see that it's no man's land right now, and there is a chance that we go up. So,
well, on the daily though, it is hitting the 61.8 Fibonacci retracement level. If you look on the pound yen daily time frame, if you look at the latest high and you draw it to the low, I don't know if you want to get rid of all those clouds, but you see, so there's something there. But it's not going to be enough. You're at the resistance level, a FIP resistance level. You're going to have to look at multiple time frames. On the weekly time frame, that's such a beautiful TIS. Have I shared the TIS with you before?
Yes.
Have I?
Have you?
Yeah, it's like basically that low body. The wick at least 50% the size of the body, and you just trade the wick. Now the pound yen at a beautiful one. I'll show you. I'll show my screen and just show you.
Please, just to show your screen. I will just.
Oh, Robert, you got 30 points. Did you catch 30 points of the NASI? That's a good move, man. That's a good move.
Decent move, that.
Good move. Yes.
Let's have a look. So let me just delete these FIP levels. Nice one. Awesome. Okay, so this is the just a made up name. It's called the TIS, and it stands for trading into the shadow. And if you can identify this on a longer time frame, like the weekly, so what it looks like is you get they work really best on when you're in the same direction of the trend, or if it's at a support or resistance level. but you get a small body and a wick that's at least 50% the size of the range of the candle. Okay, so basically half the candle size. And then you target the wick. So you trade the wick. Here's another example. You'll just trade the wick here. But anyway, so this is the same on the euro dollar, by the way. Where's the euro dollar? Look at the euro dollar here. On the, no, sorry, not the euro dollar, the pound US dollar. So the pound US dollar on the daily. Look here. Look at this candle there. Okay, we are in a range here, but if you just want to target, like if you want to focus on specific candles, this is called the TIS, and you target 60 to 70% off this wick, right? And there was a nice little breakout. I just want to mark this because what date was that? 24th, yesterday. Sorry, guys, I hardly ever know what time of the day or day of the week it is. They're all the same to me, Monday to Sunday. The 24th, see, here is, so if you identify like a TIS opportunity, then this is your break. This is a breakout. This is the breakout. And you can target a few points there. And I typically go for 60 or 70% of the wick. So that was on the daily time frame. But anyway, I just wanted to point that out on the pound Japanese yen. But you are definitely on the daily here hitting a resistance area here. Okay, so say from that high, yeah, there on the 61.8, that would not in itself be enough for me to go short. It's pretty nasty looking candles, you know. It's not really telling a clear picture, so you can go to smaller time frames. And what you really want to see here is maybe price breaking this low here and just see how it behaves there. And from there, you can, you know, maybe the price action will become slightly clearer. But it's a difficult one, definitely a difficult one at the moment. The 1 hour is a bit clearer. Yeah, you can see that you almost have this like a triple top and then broke this neckline. So if it continues lower from there and it breaks this low, I would definitely say, yeah, that's a short. And then you combine that with what you see on the longer time frames. You know, try to always stack it on multiple time frames. But I personally don't like this one. I don't. It's not a very nice looking chart. I don't know what you think about that, Igor.
So it's no what to say. It's just completely.
I think it's a very difficult one to read at the moment. It's a very difficult one to read. The pound US dollar is definitely looking much better. Did we miss an entry here? No. But this is a much better looking chart for now. I think I would rather focus on the pound US dollar than the pound yen for now, at least. Not sure if that was very helpful, but that's the answer to that question. Sorry, Richard, we took up all your time. Over to you.
Sorry, Richard.
No worries, guys. I don't have too much to show, but let me just share my screen quick.
Okay.
Show you what I'm looking at here. Right, should pop up there any moment. Nothing happening. I've hit the sharing button. Oops, nothing happened. Let me try again. Come on. Definitely a delay there. Looks like the StreamYard doesn't want me to talk today either.
Yeah.
I am sharing. Don't know why it's not popping up. I can see the little block there, grayed out underneath.
Why don't you? You can always explain your charts.
No.
It's kind of.
You can draw on the wall.
Yeah.
Yeah, I don't know, guys. Hang on. Let me. Maybe someone else share for 5 seconds, and then I'll try again.
Okay. Are you on MS-DOS or?
No, what the hell's that? How old do you think I am? Igor will be able to tell you.
Okay, I'm also trying to share, but it's not sharing. What's going on here?
Is you're not sharing either?
No, there's a little. It shows.
No.
It's sharing my
A little bit
screen.
of an issue, yeah.
Okay. Igor, you don't have any viruses on your computer.
No. Currently, no.
Okay. Well, I don't know.
Is yours not working now either?
That's right. Yours?
Maybe try to share this whole screen.
It's not working, which is weird. This happened like a couple of weeks back as well. I don't know how that got resolved. I think it was with Sam in the room. Somehow we like rearrange our screens of our webcams there. It worked for some reason, but we can't do that, and Dinesh has got to do that.
Okay. Let's.
Igor, did you try? Again?
Which chart you want to see?
Bring me up the SPX 500.
Okay.
5 minutes.
5 minutes. I will try. 5 minutes, and I will try to present.
But anyway, so you are looking at. Are you looking at the S&P 500 today, or the NASDAQ? Oh, there's something that's happening.
500.
Oh, there we go. It's working.
Yeah. Why is yours working? You special. Sure.
Oh, it's not.
I'm chosen one.
You're the chosen one.
The
See, if I just zoom in a little bit there on the SPX one.
Okay, maybe you can try again.
Okay, let me try again. It's going to be difficult to explain on someone else's.
I will stop my screen.
Yeah, sorry about that, guys.
Yes, I understand.
Come on, there we go.
Yes,
who knows what happened there, but anyway. Right, so I'm going to show you quickly the NASDAQ, but obviously we've had this hectic drop here. Price action from structure point, a little bit more different than the ES. You see the ES just punched a high for the day, not above yesterday's highs, during that 9 a.m. to 11 a.m. mark that I'm looking at, right around 9:30, right? Cash open. Whereas the NASDAQ stayed a little below that and just dropped lower. Anyway, that's the NASDAQ. I was just finding it interesting that the price action is a little bit different or structure-wise. But yeah, been stuck in a bit of a range since yesterday's high. And now, obviously, we had that hectic drop here. We've got a cluster of lows between Monday's and yesterday's sort of lows. This was a higher low. Higher low, you could probably call it, although this high over here was a sort of a double top. But that's why I created this little zone there. Price has just pierced that, and it's trying to bounce higher now. So it's typically what I like to look at. See these clusters of highs and lows being, ran or swept, as they call it. And then potentially see if we can get a bounce back to the upside and potentially trade it. Although pretty scary stuff after a pretty strong decline like that. That being said,
it just touched yesterday's low on the NASDAQ, but sorry, carry on.
Yeah, I've seen this quite often these days. You get these V-shaped bottoms, inverted V tops occur all the time. So I'm not really scared of trading it, but it's, it does always make you a bit nervous, you put it that way. I'm not really scared, but a bit nervous.
Yeah, it's the volatility. It's really volatile, and it's also the speed that it really crashed through to that level. It's very different when it just dumps
And
like
quite,
all the way
often
to
you find out if you're wrong very soon as well, without having to wait too long. So
yes.
just switching here to the 1 minute, since price did now penetrate that zone of mine, if I do get a bounce back upwards, price needs to break a price structure point. Now, since we just had one straight drop here to the downside, even on the 1 minute time frame, there is no real structure point. If you know what I mean, let me just get my path tool out here. So into that low, we've done this now. What would be nice if we actually fail to break here, make another low, slightly below here, and then move up. Then that would turn into a price structure point. And if you then get a move up, with a fair value gap, then that will be a trade for me. Alternatively, if price just does this and continues strongly lower, then I'm just going to sit on the sidelines. It needs to start showing a bit of strength here very soon. So from a pure price action perspective, I think there's another chance that price will actually might do that now. Just penetrate that low, but then we'll have to wait and see what happens. All right. So, I want to see, and this is part of the strategy's rules, I need to see a break of a previous price structure point or level. And there's no such level. It's all the way back up here since that drop was just one direction lower. No nice structure on the way down either. Right. So let's see. That's the ES. And then crude oil, sort of been hovering around the overnight session high, around 69.56. And I don't know if you remember from yesterday, I did drop in this line here where a cluster of lower highs came in. And this was at the end of February, on the 27th and the beginning of this month. So my expectations still are that price is gunning for that. Whether you can call that a liquidity sweep if price does reach it and reverse lower, I wouldn't really say it would be, but it could potentially be. Who knows? But price is potentially gunning for those levels. So nothing for me really to do here on crude oil. Still very, very strong, right? Yesterday we did have a bit of a strong decline within that time zone, and has since recovered really nicely. So I still think the 70.36 sort of level, which is that cluster of lower highs on the higher time frame here, and I'm just using a 30-minute. I think that level is probably attainable within, I don't know, maybe a few days. That being said, we do have crude oil inventories in about 13 minutes. That's a 10 Eastern. So it'll be interesting to see how crude oil reacts to that. Generally, I don't trade going into that report. It can be quite volatile for crude oil. So, sitting a little bit on the sidelines here. Potentially tomorrow we might have a setup, or I'll look at crude oil again. So the one I'm really interested in here is to see if price can just give us one more break of this recent low, a 57.57, with a bounce back upwards without continuing too far to the downside. So it needs to sort of just pip it, whether it just pips it, close below it, not too far, followed by immediate bounce upwards, break of price structure, then I'll be interested in going long. If that doesn't happen, then we might just see price continue low for the rest of the day. So that's what I'm looking at, and I'll keep an eye on that on my side until something happens and let you guys know.
Well, how do you think, because you're looking at, there we just broke the yesterday's low. Broke the low. This looks very bearish. Like this can easily...
very bearish. Look at this drop in the NASDAQ especially. Straight down.
Yeah.
Boom.
Yeah, I can show. Do you mind if I just quickly show you my screen? And I'll just... It's such a beautiful move, right? You see, the thing is now, this is what I always... what was that? Sorry. Man, this is so beautiful. Well done, Robert. I'm jealous of you, mate. But if you look at, you should know by now what I look at, and that is I just want to get 2 out of the 3 time frames to agree, right? So what did we have here? This was a bearish candle on the half an hour plus a breakout, and you had it on the 1 hour over here because this was still busy forming. So you had 2 of those ones. So this is very painful to watch. But anyway, so that breakout was just beautiful, just no retest, and it keeps dropping, and then there's no entry because remember when you go over to the 1 minute time frame, for the trade to make sense, it has to make sense. You can't just chase it.
No.
So it has to come so now it's hugging the 2 standard deviation. Okay, so it has to. I was hoping for it over here to come at least to the VWAP's 1 standard deviation. Didn't do it. It's just too strong. So this can now very easily go to S2. This is a really, really strong bearish candle on the 1 hour. Nice, Robert got another 31 points. Nice one, Robert.
Nailing it, Robert. Well done.
So yeah, the support to me would be if there's 233 EMA on the half an hour. Okay, I use it on the half an hour at 233 because it's been just lots of testing and trading, and that setting just works best. But that is going to be a support area. You can see how they come together as well, S2 and the EMA. Okay, so that's going to be a support level. Whether I'm going to get something, it just moved away from me.
Yeah, that's a very strong decline. It's
it's nothing for me.
Is it news driven? I don't see anything. I try to see if there's something, but
no, I think it's a lot of it. I think it's because remember it just closed above the 200 EMA. That's a significant level, so it could just. This is Bitcoin going down now. And where is that? US Tech. You see that? Yeah. So, it's like we had this gap update. Remember that one on Monday, Tuesday, and now we just it didn't even break the high. Well, in pre-market it did. Now it just completely engulfs that candle. Now we're below, and that's exactly what I'm saying. Like when you once quit for the day, Robert. Quit for the day. Call it a day. Yeah. Cash in. Hold on to it.
Smart choice. Smart choice.
Yeah. Don't give it all back. You're not going to
that's
talk to
the worst, giving it all back.
Yeah.
And then you want to revenge it again, and then that's when you make mistakes.
And then you're not going to talk to yourself for 2 days. Yeah, so don't do that. So this is the thing about the 200 closing above. And so we could see a bit of ranging. I don't know. At the moment, we're not seeing any ranging. This is just dropping.
Right. Yeah. Maybe that gap we were talking about yesterday is what's going to get filled.
So we're getting to S2 now. I want to really see what happens at S2. Is that going to be I'm not going to take it because it will not be. It won't be within how I trade. And remember, I need to get 2 of the 3 time frames to agree, and they clearly don't. But it would be interesting to see if it bounces off S2. The pivot points definitely are respected levels in futures. I'm not sure if they are respected in Forex. I don't really know. They definitely are respected levels in futures.
For sure.
So, but I would like to see what's happening because, as I said, I do think this could be, what is this level here? Did you close your charts, Robert? Did you close it? Hope so. 2189. So that's quite a while to go, man. That's quite a while to go. But anyway, that would be a support level, but I wouldn't necessarily trade off it unless I can get. I need a bullish candle on both the 15 and the half an hour at that support level, and then only will I look for levels here on the 1 minute.
So where's that S2 of yours at? Around
2200.
Yeah.
2210. This is on the
okay.
Yeah, this is on the June contract. I think the values are not the same. You didn't close your platform, Robert. Okay.
Watch ours and close yours.
See on the CFDs, it shows like close to 20,000. So there is a difference, and it's because of the contract you're trading. Okay, the values are different, but the price movement is exactly the same. But anyway, yeah, I don't think there's going to be a lot. It looks like it's pushing back up now. I don't know if we're going to get a pullback all the way to yesterday's low, but I would think. But I've had days that don't happen very often where you get in like around the pivot point, like over here, and it goes all the way to S3, and they are more likely to happen than moves to the upside to S3. The drops are usually much sharper.
Yeah, much quicker and sharper.
Yeah. So, but anyway, well, let's see. I was really hoping to get something. Not today. What's the others doing? What about there's a news event coming out
tomorrow?
No, today on the crude oil inventories.
Yeah, that's at 10:30. 5 minutes time.
In 4 minutes, yeah. What do you think? Do you think that's going to have a significant impact? Because I see there's like the forecast is weaker than the previous.
On crude oil?
Yeah.
I think it was pretty muted last week when it came out, actually.
Yeah.
Last week, Wednesday.
Yeah, I don't know why that's
mostly influenced these days with the geopolitical tensions and that sort of stuff.
Okay, I really want to see now. Oh, where's the one standard deviation? Like way up there.
Like it's a far way back up. Where's that roundabouts on your chart?
The one standard deviation.
Yeah.
It's at 2328. We're now 2265. So it's 20. Let's have a look. 2327. So 2327. 327. Yeah, you see what the problem is with that is then this is going to turn into a bullish candle. And then if this is turning into a bullish candle, we'll see if it even gets there. I mean, if it lines up and it's rejecting from that, I will take the trade because these two will still line up. But we got so close to the S2, and that's a support level. It's just it just ran away from me. What can I say? It just ran away from me today.
Yeah.
Anyway,
what time is that news tomorrow? 8:30 Eastern. Yeah. Final GDP and unemployment claims. Right. So that'll be before the morning session. Hopefully.
Hey, Andre.
Great going then.
Hello.
Nice to see you again, Andre. Yeah. The pound US dollar. Yes, I think as I've mentioned for the last 2 days, like I think the 1.286 level and the 1.284 level, 1.283, very possible. It's all going to be like once you're at that key level, you need to look at price action itself, like maybe some sort of engulfing candle or hammer candle, and then a follow through. You don't have to get the timing exactly right. You can even be a little bit late. Wait for it to move a little bit further. For example, let me show you here. See on this take here. Okay, this is where it touched support. You get that it's not quite an engulfing candle, but you can wait for it to move a little bit further away. Give it a little bit more time. This is a much longer time frame. It does mean you're going to perhaps reduce your risk-reward ratio, but you are going to, at the same time, increase the probability that it is actually going to go in your favor. But even then, it's not guaranteed that it's going to work. But it's all about just increasing the probabilities. I hope that answers your question. But 1.283. Let's have a 1.283. Where's that exactly on here? Where did you? What is significant about that level, Andre? I don't know if you're still there. What is that based on? Like, can you see some, or is it just a round number? Let's have a look here. Oh, that's too far. I can't see. Sorry, guys. I'm just trying to find out why 1.283. It could just be a round number if it's not there. But yeah, it's all in the zone. Look, it's not always going to just perfectly bounce off a support level. It can break through a little bit and then come back up. So it is going to be important to look at price action. But this level for me, the 1.286 is significant because, as I've said in the beginning of the session, it's also the lowest point on the daily range. Okay, so that's the lowest point of this range, and that's the highest point. So we're now approaching the lowest point. So it's going to be a case of how does it behave at that level. It could pierce through. We'll just have to wait and see. But at the moment, we're not there yet. It's still kind of teasing us a little bit. But it's definitely bearish. This is definitely going to come down. Yeah. It's tempting, Robert says. He wants to flex. Oh, no, Robert, don't do that to yourself. Okay, so that's it for the pound, US dollar, and the NASDAQ. I do not think I would definitely not be at this point. I'm a little bit neutral. I would wait because it's again at the S2 level, and that 233 is in the way.
Mm-hmm.
But if I can see some bullish reversal candles around this level, at the S2 level on both of these time frames, I will change my bias and I'll look for a breakout to the upside and maybe a retest or something of that sort. So you see, okay, Andre said the perfect for me is the region between 1.28 and 1.285. Let's have a look, 1.28. Let's have a look at 1.28, 1.285. I suppose it's, yeah, this high there, right? Yeah, because it's also close to the 50%. Yeah, I agree with that level. Definitely. That's a very good level. That's a very, very good level. And
so the both levels, and the 1.28 and 1.2850, both are institutional levels for British pound dollars. So there was a lot of times weekly low, weekly high for the both of these price levels.
Yeah, it's very good. So no, those are really good levels. So I do think, but any of that is going to be possible. But you just have to really focus on price action at all of these scale levels. There's a few kind of hurdles. You know, it's not going to be a straight smooth. It's going to be a bit messy and rocky, and it's going to confuse you. And you're going to go, is this the long? You know, it's not going to be that straightforward. But the key thing is just to trade at key levels. Trade at key levels, and not when you're in the middle of a range. This was in the middle of a range. There's no
middle of nowhere.
Yeah, it's very difficult to stack probabilities when you're at that point. It's much easier to wait for key levels and then look at price action, then look at the patterns and all of that at those levels, and then try to trade off them. But yeah, Andre, definitely, I agree with you. Those are really good levels. The 1.28, 1.2850, that's the 38.2. Close anyway. Yeah, it's around this level. Yeah, because that's the high. Yeah, of the, it's not quite the 38.2, but this high level. Yeah. So you've identified the highs and not exactly the the fib levels. They're pretty close. Pretty close. But yes, you're absolutely right. Yeah, I agree with those levels.
That's correct, Robert.
The NASDAQ. The NASDAQ. Yeah. Okay. So
it behaves like it's on crack sometimes. That's for sure.
The NASDAQ. Yeah. What is it doing now? Let's have a quick look.
Dancing a little bit.
You know what?
A little bit.
Bearish. Okay, guys, I'm going to take a small trade here, and I'll tell you why.
Are you shorting?
I'm shorting because it's coming off yesterday's low. Yeah, does that make sense? Robert, don't follow me. Okay. This it's just luck that I just saw this. Okay, so it's still within my my criteria. Last close candle, bearish, bearish. And then the reason for entry, always make sure you have a reason for entry. And this is bouncing off yesterday's. And obviously this can fail, and I'm happy to take that loss. But
are you trading micros there again?
I'm taking two micros, yeah.
Okay. Cool.
Yeah, just 2 micros. So we'll see if that's going to hold or fail. But that's the setup. That's not a bad setup. The take profit is not going to be at the low, just because I feel like we've already been so close to S2. So let's see what happens. Okay, you guys want to like sing a song, perhaps? Sometimes I can't stop like it's a crack. Oh, Robert. Oh no, Robert, you're not on crack, are you? I'm just joking. No. All right. So does the entry make sense for this particular trade?
Yeah.
Not the highest probability, but I still think it all makes sense. It's all lining up. We'll see if it pushes up. And it does look like it found a bit of support there. Well, I'm pretty happy with that entry. How many time is left? Okay. All right. It does look like it's going to go against me so far. Okay. Basically, it's touched that high.
Yeah, we've had no movement on crude oil either, so very muted reaction.
Let's see. Yeah, this one looks like it's going to like pierce against me, but my stop loss is at a reasonable level. It's not right at the high. It's giving it a little bit of clearance. As you can see, it's over there. So it's still kind of bouncing off that yesterday's low. Okay, it's going to break in, I think. It's going to break in. Or what? Well, that was close. Yeah, I mean, sometimes they work, sometimes they don't work, but you just got to make sure that the reason why you took the trade makes sense. If someone asks you, why did you enter the trade? Then you should be able to explain exactly what you were looking at and why did you get in. Because in this case, it was bouncing off yesterday's high, okay, with the bearish action there. The only thing that decreases the probability of this trade a little bit is the fact that we got so close to that S2 already. Does that make sense? So we're already there.
Yeah, big move.
Yeah. So let's see what happens with this trade. Are you also trade 1 to 5 micros? Yeah. I mean, I see people trade, or you see a lot of people trade like one mini contract, like 10 micros. That's insane. That is insane because this loss, if I lose this trade, it will be like, I don't know, $60 or $70.
Yeah, it's not big.
It's not gonna. There's no emotion involved. You don't like the outcome of the trade. It's very difficult to get upset about a $60 loss. But a $300 loss, now you're going to go, and now you're going to start to make calculations in your head. Oh no, I only have so many trades left, and then I'm done. It's just not worth it, Yeah. Trade small. It really solves a lot of all these FOMO problems and the fear of trading and all of that. I just think this is going to push up, and that's fine. I was due a loss. But all the trades, like I had last week, the trades I placed, all of them worked. The recordings worked, and now I just this loss is perfectly fine. But I'm still kind of hanging on to a little bit of hope, yeah.
As you see, you've done it for all the right reasons. So
yeah, it's struggling a bit now. The only thing is now another 6 minutes. And we'll be forming a bullish inside candle right on yesterday's low. Obviously, there's another 6 minutes left. But the stop loss, that clearance always helps a little bit, right? But I think it's fair to say that this could very easily have been a loss. Okay, it came very, very close. So, but we're not out of the woods yet.
Fingers crossed.
Yeah, well, whatever. It's like, I don't. You know, when people say that there's a big
There's no
difference.
luck. I didn't mean it that way. It's just,
No,
for
no,
you.
no,
I'm
no.
rooting for you.
No, what I'm saying is like, people say there's a big difference between demo trading and live trading.
Oh yeah.
And the reason for that is because now there's money involved. But why is there no emotion involved in demo trading? Because it's not real money. I don't agree with that. I just think if you trade real money and the emotion starts to get in the way, you are just trading too big.
Yeah.
Really, like honestly, trade small to a point where the outcome of any given trade is almost like it doesn't affect you in any way. It's like it's too small to make an effect. So over a series of trades, they do add up. $100 here and $87 there and $150 here, and you can have another day where we can have a better day, or you can have more opportunities. Because sometimes I get 3 opportunities. The worst ones for me on the NASDAQ specifically, I trade obviously more than that.
Sorry.
But if I trade, say, place 3 trades, and the first 2 worked, and then the last one doesn't work, and then I go, well, that's it now. Done for the day. There's no chasing. I don't get excited about the profits or the losses for the day. Anyway, I'll repeat myself. So let's watch this movie unfold. It's it's ranging there at yesterday's low. So it's kind of struggling to make a decision there. It doesn't want to go back in, or is it going to go back down? But at the same time, you also get this. There's still a lot of time, yeah. Anyway, how will you know how the trade worked out? Hopefully it will move in the next 5 minutes. Robert, have you placed another trade? I hope not.
I think that the biggest problem is when people risk a lot of money is to have some kind of luck and then make money, and then they think that if they repeat that process and risking again, and then they're just in some crazy circle, and it's very dangerous.
It's all forming that bad habits, thinking you're bulletproof.
Yeah, look. The thing is, that's so dangerous. But I also think having a very good day is as dangerous as having a bad day, because they both put you at extremes in terms of emotions. You can have a very good day and then you get super excited and then you just keep going and then you give it all back. And the same is true for the opposite. You can have a bad day and then you're like, I need to make this. They're both bad places to be. That's the point. You need to really be in the middle, which is neutral, with no expectations. Just focus on the process. Don't worry about how much money you're going to make or anything like that. Just focus on the process. That's the most important thing. Like even on my CFD platform, I don't look at my P&L. I go to the experts tab, or I don't look at it at all, because I know when I look at that, it's distracting. If I see I'm up $800 and now it goes back to 450, you start to focus on that, It's very, very, very distracting. But if you don't focus on that or you can't even see it, then your attention is 100% on the charts. You just you don't even know how much you're up, because you're just focusing on the chart. But that's on the CFD side of it. Because it definitely it's distracting. That's what I find. I don't know what you guys think about that.
Yes.
No, same.
I remove the terminal sometimes.
Yes. Say again, Igor?
Sometimes I just remove the terminal. I cannot see on the chart at all. Just the chart and nothing more.
Yeah. Yes. Yeah, that definitely helps. Okay, so this we got a new 15-minute candle starting right now. And it's bearish. So we're not getting that bullish inside candle. But anyway, that's the trade. The level I am taking profit is 22.56 on the futures, so you can just look at your chart and see whether this trade has worked or not. It is starting to find a little bit of direction, so hopefully we can just move. But I think we are almost out of time here, unfortunately, and it's just a shame I got this trade right towards the end of the session and not in the beginning. It's going to be a big drop, 30 seconds time.
Just after we leave.
Yeah. Okay. Well, it doesn't look too bad. The thing is, guys, we could range here for a while. So, but yeah, you'll see on your charts whether this trade has worked or not. But that's the trade for today. Cool. Way after the big drop. That this is the money right here. This is the money right here. I'm just trying to pick up some of the crumbs. I'm just trying to pick up some crumbs, yeah. But anyway, I don't know if you guys. Sorry, Igor?
It's nice move, like I see, but we are just very close to the zone with a low volume. Maybe can be rejection here. So I hope that it just pass down. We will see. This is the crucial moment. Yes.
Crucial moment, guys.
Cool,
crucial moment. Let's have a look. Come on, the next minute. One more minute, guys.
Yes,
yeah, there we go.
This is good. This is good. No, this
Come
is
on.
Good. Yes. This is the moment when we push down. So
yeah,
no back anymore. This is it.
Yes,
Igor was selling his millions there to help you out.
You have this this volume void. It usually sucks through those areas.
Yes.
But now, did I place my stop too low? Oh, you gotta be kidding me, man!
Real life trading. That's how it works.
Yeah, I still think it will come lower. But sorry, guys, I'll keep you for one more minute, and then we can say goodbye. I just hope I want the trade to close in the session. Like the last time, I also had to go, and the trade did work, but we had to close the session. Okay, one more minute, I promise, and then we'll go. My future start, I lost 3K in 2 hours. That was all the money it took me about. Yeah. That should be enough for you to say the big trade sizes and things like that is just not worth it.
Yeah.
It's just not worth it. It's just that is just pure
pain.
Yeah,
and being angry at yourself.
Yeah. Oh, I can't believe it. I actually thought I placed that at a very realistic level as well.
Here we go.
Come on, Nazi. I know you can do it, boy. Come on. Not that far to go.
Yes. We will see.
Yeah, we'll see. Come on. Yeah, I can tell you a lot of stories about money I've lost. Especially the first, oh man, I think it took me longer than most people, because people talk about 2 and 3 years. Try 10 years. Yeah,
it took me about good 5-6 years.
Yeah, because it's this.
Yeah, from losing to becoming break even, and then start slightly making money. You know, it's one hell of a process.
Yeah, because it's so frustrating as well, because it's like a telephone book full of strategies and ideas and like concepts and time frames, and it's like, and you listen to this guy and you change, and it's definitely not easy. But anyway, guys, I don't know if we're going to get it. I know we're in overtime now, but yeah, you'll know whether the trade works or not. I was just hoping for it to come on, please. One more minute, I promise. One more minute, then we can go. Okay, come on. This is your time, Nazi. This is the time. Come on, boy. Do you talk to your trades? I think I've already mentioned I always talk to my trade. Come on, you can do it. I should be out of this trade already, man. Come on. Doesn't want to do it. Okay. Well, if this minute closes, we can say goodbye. Sorry for keeping you 5 minutes longer.
Yes.
No worries. No worries at all.
I just like to see.
Come on. Come on.
Oh, we had a volume node there or what? I can't even see. Oh, there we go. Come on. Come on. I don't want to do it. So frustrating. Like,
Yes.
you know.
It's very close. It's very close now.
Come on.
Yes, it will close.
It just doesn't want to do it. Okay, this candle. This candle. Okay, well, all right. It's not going to happen in this candle. So it looks like it's pushing back up. So we could be in a bit of a range. So, all right, guys. But yeah, you can check your charts to see if this one worked or not. But thank you very much for watching and tuning in, Richard and Igor. It's always a pleasure to see you guys. Have a great day.
Yeah.
Robert,
maybe
and all
see
the
you
rest
tomorrow
of the...
morning. I'm back on again tomorrow morning. So
Robert, wish you a great day.
Yeah.
Cheers, guys.
All right.
Cheers, everyone.
Cheers, guys.
Have a good one.
Bye, friends.
Bye.
Hey, Paul.
Howard, how are you, my friend? Good to see you.
You too, man. Very good. Very good. Enjoying the marchés.
Oh, sorry, I'm having a very bad hair week.
You're lucky you still got some, huh?
Mate, you can't see the top, right? So come on, let's.
Yeah.
So what you been looking at this week?
Yeah, well, it's been pretty boring, really, on the on my side on the currencies. Just really, the dollar has been kind of correcting higher, sort of a little bit every day, but not aggressively so. So yeah, really not a whole lot. The ranges have been very small. You get a breakout, then it comes back in again, and no real follow through. So not a lot. The yen has been just choppy. So yeah, so I think I'd say range bound, not a lot. I think you've probably had a bit more action in terms of trend, haven't you, on the recovery from the lows?
Yeah, for sure. What do you think? What do you think's causing the ranging in your market at the moment? Do you think?
I think you probably got a little bit carried away on the recent dollar decline, euro rally. Sterling kind of struggled above 130, and euro I think above was it 109, 109 and a half. So it just seemed to be that we've kind of shaken out some of the stale dollar shorts rather, come retrace back, and now we're kind of seeing a bit of a bit of choppy stuff. I think as we approach a corrective low for euro and for sterling dollar cable. So it's just really, I think just kind of a corrective pullback. It's just got, it did too much too soon, I thought.
Yeah, which is always the case when there's a lot of fear and uncertainty. So, I mean, is there anything particular which the market is waiting for? I mean, I've lost track of what's going on with tariffs because it's just on again, off again, off again, on again. I mean, have you got any clarity there at all?
No, I think the initial impetus for the for euro dollar and sterling cable sterling dollar was the kind of the Europeans having to rearm. So that seemed to give it a bit of an additional boost. But things have gone a little bit quiet on that front. So maybe I think you need to see things settle down with this administration, because you never know what, something comes out and it changes the next day. So
all right, we've only got 3 years and 9 months to wait.
Scary stuff, but
I mean, if you remember back, I was just I watch a lot of late night television in the United States. It's my window into the social zeitgeist, as you will, and you just you think they make jokes all the time. Like, you think back to the previous Republican administration, and there's so much happening every day, you just can't remember it. And how can you plot a graph? One day it's a Sharpie on a hurricane map. The next it's just deporting someone. It's just it's all good fun, right?
Yeah. it seems like they're kind of making it up as they go along, but
no.
Never. There's a plan there. But
do you want to kick off, or shall I kick off and then you take over?
Yeah, I'm happy to dive in just to show what I've been looking at. I've got a couple of pending trades on as well, so maybe we'll get something in this session. We'll see. Let me present 1 second. Okay. So very shortly, you should see a screen. Okay. So this is euro dollar. It's a 30-minute chart. It's been, as I say, it's been kind of trending lower for the last few days as the kind of the stale longs get kind of shaken out of the market. For me, as I say, I see this as a corrective phase that is pretty close to completion, and I'm basically looking to be on board when the turn comes. So trade wise, so basically this is as I say, a half hourly chart. Within the last hour or two, it broke down through the previous swing low, and we've seen this snap back higher. So that gives me a kind of a bit of a clue that the those that sold the breakout looking for continuation, they're kind of on the wrong side of the market. So those that sold below this this purpley magenta line, if you're short below that line, you're not feeling too happy, certainly on a kind of a day trade basis. So my trade is basically getting in as momentum starts to pick up and they realize they're on the wrong side of the market. I'm getting in actually a little bit ahead of this this resistance level, which is the previous high. I've got really sort of, just looking at the top of this big half-hourly candle. I think if we can get back through there, that could give us the push higher, and then we can break through the the big level. And once we get through this level, the high for the day so far, I think that's when the stops will really kick off, because they'll, if you're short this market, you shouldn't, on a day trade basis. I think there'll be a lot of stops above the day's high. So I'm kind of getting ready to to buy, looking for the short squeeze on this one. With regards to why I'm bullish on this thing longer term, I have this is a daily chart now. So this is the rally that we've seen over it's kind of since January. We saw initial leg up, a retest of the low, didn't make a new low, and then we started to see this kind of trend higher with that acceleration through, which we talked about a bit before. So these guys bought the breakout, no follow through, and so we obviously seen this kind of natural pullback, a little bit like back down here, where they got a bit carried away, tried to push it through the swing high, but rejected, and then you got a bit of a shakeout back down to the previous support level, this purple magenta line here. And I think we've seen a similar kind of thing here, where we've had a marginal new high, struggle, failure, and then we've seen this kind of shakeout, which has come back down to this kind of support zone last few days. Excuse me. So I'm looking for the turn. I think if we can obviously break through today's high, that would give us a bit of a indication that a short squeeze is possibly starting. But more importantly, we break through yesterday's high, this kind of small candle, then we'd get like an outside session if it happens today, and that would be a good trigger, I think, for the big move higher multi-day. So that's really what I'm kind of looking at. It's just waiting for the low to form has been a little bit frustrating, but the markets, they do what they want to do. It always takes longer than you expect. That's just the nature of the beast.
Any concern about, sorry, going just pop back to that one again, because that's any concerns about the dip to 105-200, because obviously that's kind of the breakout level. I mean, it's a long way to go, but any thoughts on that?
Yeah. I think I'd be a little bit nervous if we got anywhere below probably 106 on this thing, because the way I see the structure is this is just a natural correction. I think if we start to perhaps accelerate lower, that would be a concern. That would be a bit of a concern. If from a bullish perspective, I'd have to kind of reevaluate and say, okay, we're doing something a bit more negative on a multi-week basis. But until that happens, I'd say just looking for the turn, and then just looking to go with momentum on this one.
Yeah, it certainly looks like it's trying to set up for that way. Yeah, thanks for that.
Yeah, it's struggling. Yesterday's range was quite small. It seems it's making lower highs and lower lows all the way through, but it seems to be no momentum. There's no follow through on the downside. Which gives you an indication that maybe the move. I mean, it was quite kind of momentum based here, but the last couple of days it's not really seeing too much follow through on the way down. So that's really kind of the way I see it on that thing. Sterling dollar, a similar kind of idea here, although I'm giving it a bit more room for the breakout to the upside, because it's quite volatile. So cable is basically had a crack at the big support from a few days ago, but again, as with euro dollar, it's snapped back up again. So there's a bit of an indication, a bit of hesitation of actually selling the market or holding on to shorts at these lower levels. And I think again it's the same kind of picture as euro dollar on the daily chart, on the bigger picture, where they got a bit carried away on this recent push higher. And then we've seen a kind of a shakeout that has begun. And today we've tried to extend that shakeout. It tried to rally for a couple of days, but no real momentum on the upside. Today is trying to break through on the downside, but again, there's a lot of support, a lot of big support coming in. The low 120, the mid 128s on this one. So again, I think it's a correction. I'm just looking for the turn to to getting long for a kind of multi-day swing trade on this one. Yeah, there were some questions I think yesterday about somebody was saying that 128 would it damage the structure if it went down to 128? And I think it's a similar kind of thing that we were talking about on euro dollar, and I think it would. I think should we get much below 128, that would kind of damage the structure a little bit, and it would mean something a bit more negative on a multi-day basis. But for me, I think it's just a minor correction. It got a little bit overextended, a bit like here, where the trend is up, but you see a couple of 2 or 3 days against the trend, and then the buyers step back in again. So back on the short term, trade wise, I'm looking for a break of 129.15, get back above there. That would be, I think, a good impetus that these short sellers, they're underwater, they're losing money, they've got to basically cover their short positions, and we can start to see a squeeze. So yeah, that's pretty much where I am on those ones. Yeah, not a whole lot else. I guess the commodity related markets, Aussie and CAD, they've seen a bit of strength today. Aussie dollar has started to move a little bit higher. This is the daily, so it seems to have made a base a couple of days ago. Had a bit of a shakeout. We're in this range on that one. Let's move that up there. I think, as with euro dollar and cable sterling dollar, I think the bigger trend is to the upside. Weak dollar, but more shorter term, we're stuck in a bit of a range. And it looks like we've kind of based at the bottom, lower end of the range, and we're starting to move higher. Canada is the same kind of thing. I'll just get dollar CAD. So yeah, so dollar CAD, I think we made quite a big high here. First leg down of a new bear trend, corrective rally, and you've got these kind of lower tops on the daily chart. I know you might want to call that a descending triangle, possibly. Although these lows are not dead, they're not exactly at the same place, but you can see, you get the idea where we've kind of broken, right? Broken through. Yeah, exactly. It's almost a descending triangle. I'd say the trend line on the way down is much more shallow than.
Yeah, I mean, for people watching, sorry. I mean, the psychology behind, well, not the psychology necessarily, but essentially these descending or ascending triangles, they're essentially either, for a descending triangle, it's the buyers which are being attacked as the price action slowly trends towards that, and then the vice versa, it's the sellers being attacked. So it doesn't really matter if you've got a straight line, as long as you've got that push and that constant knocking on the door, which is why it's quite a good pattern to trade, really. I mean, I quite enjoy them trading them. They're quite straightforward.
Yeah, I think they're some of the best ones, actually. I think they're some of the best because you can see the shift in supply and demand over a good period of time, and here you've had that with the lower highs and relatively flat bottom, which is just breaking through today. So that could be quite a good one for acceleration lower. So it seems to be leading the way. While the euro dollar and pound dollar are not in a massive hurry to rally, this one seems to be leading the way, with the Aussie not too far behind it. So that's really where I am on the currencies. The yen has been very choppy, as I say. I'm looking dollar yen. I'm kind of looking for. There's a big resistance zone above the market, which it kind of stalled at yesterday. Where is it now? 150. Well, not a million miles away from 151 on dollar yen. So we had that kind of, I I guess bearish engulfing type candlestick there, or dark cloud cover, whatever you want to call it, a reversal day. Today we're having another go at the upside, but it'll be interesting to see whether this thing really struggles and starts to top out and resume this longer term downtrend. There's big resistance coming up here, 150, 130, and there's an old support level at 150, 93. So that's really why I've kind of marked that region there. So yeah, I'd be looking for this thing to kind of struggle and start to head lower. I don't want to sell the thing until it really starts breaking through either today's low or yesterday's low for sure. That for me would say yes, the momentum has turned to the downside, but at the moment it's a little bit dangerous to attack it from the short side, I would say.
Yeah.
Bigger picture wise, I use Elliott wave, which not everybody enjoys, but sometimes you can it can give you some pretty good patterns. I never use Elliott wave.
What's going on? I don't
Yeah,
understand.
it's not for everybody, because I think you can get a little bit too hung up on, you know, every single move you've got to get it, or you've got to make it make sense. But for me, if you're using Elliott wave, what you should be looking for are 3-wave moves, ABC moves, which if you can't chop a rally up into 5 waves, it's most likely to be a 3-wave move, and that is usually against the trend. So obviously the trick is, when you're trading, is to figure out which way the wind's blowing, which way the trend is, and if you can identify an ABC move, it'll give you a good idea which way you should be trading. And I think this bigger picture stuff here, we've had a major top at 161.95, a swing down, and then we've had this kind of ABC move up, which is almost like a retest of the high, but didn't quite get there. And since we've since then broken down from there. So I think the major trend, we've had first leg down, correction, and this is kind of the early stages of the next leg down for dollar yen, which targets much lower levels, obviously. But in the short term, I think the buyers are kind of in control. I need to see something negative on the shorter term charts, or breaking daily session lows before I can have a go on the downside again. The yen crosses, euro yen and sterling yen, they're kind of range bound. So the yen has been generally weak, I would say. This is the this one is euro sterling, so just in a massive range, really. Can't really get too excited about that one. So there's the bottom, and we're kind of heading towards the top. Top of the range, and maybe you can play both sides within the range from a trading perspective, because these are multi-day sessions that you can you can have a go at the market and look for, you can play kind of overbought, oversold within the context of this range. And the similar kind of thing with sterling yen as well, where again we've got a kind of a range bound environment there. The sterling yen. So sterling has been quite strong of late, but again with these two charts, I mean, they tend to do the same kind of thing. The yen against the European currencies, they tend to be very similar. So nothing to get too excited about, I think, on the yen crosses. Did you want to jump in and have a look at some of your markets there?
Yeah, sure. I think our good friend Andre has asked a question, but not quite clear what he's asking about. But maybe you can figure it out. He's Howard, do you believe in a bigger correction up to 128, 1285? Do you know which asset he's talking about?
He'll be talking about sterling dollar cable. For me, I think, as I said before, marginal weakness. I really can't see it much below this line, which is, what was it, 128.60 odd. So I think, as I say, I think if it gets to 128 and below that, I'd be a bit more concerned about the longer term trend being changing to down. So for me, I would say I don't think we will see below 128. That if I were to make a call, I don't think we will. But obviously, never say never. But in the context of the bull market, we shouldn't really be trading below 128, in my opinion.
Yeah, it's a bit of it's a good. Thanks for the question, Andre. It's an interesting proposition, because looking at this chart, obviously we've had a really strong 3-candle move, and then you've got, but then the breakout, the local breakout from which those 3 candles came from, is at a lower level. Yeah, so that range there, where there's 3 candles pumping us up to the level we're at now, that's at a lower level too. If you scroll left a little bit, if you won't mind, just scrolling left, and you'll
Yep.
yeah, so you'll see that on the far left at 812, you've got that slightly higher level, right? But because it's historical compared to the previous local level, it's a bit confusing where the price action might stop. So I think that's what's causing maybe the ambiguity, because there's a couple of levels, one in the past and one more recent, and it's difficult for traders sometimes to negotiate that. I was thinking just the one step down, just maybe, exactly. Yeah. So there's that.
Well, down to this one. Yeah, the previous swing high kind of thing.
Yeah.
So 27.16 basically.
Yeah. So it's confusing sometimes because traders typically will go off, the most recent level movements. And because we've had such a strong move, it's a bit like, where is it going to fall? Where is it going to sit? And I think it's a decent question. I think I agree. Just basically, I don't know anything. You're the expert here, of course, but I agree that anything below that level, those 2 lines you've put on, there's probably a problem. So yeah, I think that probably answers the question. Yeah, keep the questions coming, guys. Thank you for that. Thank you, Howard.
Absolutely. So as I say, from a trading strategy perspective, I'm looking to buy it once we get some clear signals that we're basing, and maybe we get the thing above 129.15 today. Could be early warning, but yeah, I think today's high, should we break that, then that would be awesome as a buy signal for me. That would tell me that we've really seen the bottom of this correction. As I see it. So
well, let's
so that's
go on, Karen.
Yeah, do you want to
yeah, so why don't we just jump in with Bitcoin, then maybe I can hand over back to you, and then we can finish with some crypto setups. A bit of a chill Wednesday, right? Let's I'm interested I've got a piece of news which I'm just gonna bring up a Bitcoin chart. I'm interested to see your thoughts on this, because it's a bit let's just find a Bitcoin chart. Here we go. So we'll just leave that there while I'm asking this question. So there was this, well, what do you know about stable coins, Howard, in crypto? Do you know anything about them?
Yeah, I know that they exist. Yeah, so how does that relate to Bitcoin per se?
Well, the thing is, it's about the news really in the market, and I'm trying to get my head around it, because, okay, so the biggest in the crypto space, right? There's a lot of it's the reason why the reputation crypto has is quite there's a lot of fraud, there's a lot of issues like that, a lot of corruption, a lot of tokens which get released which just are nonsense, and they're just pump and dump schemes. I don't really want to use any political figures, but there are plenty of political figures around the world who have got their own token, and of course they're just money-making exercises, right? We've got Melania token, Trump token, and other people around the world as well. Now, what I find interesting is that, and what I find concerning is, coming on the back of the last few years where the SEC has been really going after anything which doesn't fit properly in the traditional kind of asset mold or security mold. And the White House has announced out of the United States that they're essentially going to have a 100% backed USD1 stable token, which is associated essentially with the government. And it plans to expand. So I don't know what to make of it, because you're looking at, let's use the word institutional corruption, right? Mm-hmm. And I'm trying to figure out what this means. What does it mean when an administration, not necessarily a government, comes out with a stable coin? I mean, what's the play? I mean, because USDT Tether, which is the pair for most cryptos, that's obviously pegged to the dollar already and it's widely used. I'm like, what is the need for a new one? So I'm just a bit concerned about news like this in terms of, are we going to suddenly, instead of like going after cryptos and trying to make them secure and whatever, I mean, obviously you can't fit crypto into the mold of a traditional security, which has been where the sparks have been flying. And I do support that there should be, bad actors should be chased after, but legislation should be put into place in order to accommodate crypto's uniqueness, as opposed to trying to get it to fit into a square hole when it's clearly a hexagon or something, right? But this stable coin stuff about, what happens when a government, the United States government, is in control of crypto pairs. Do you know what I'm saying? And I'm like,
yeah, it's a bit scary in that respect, isn't it? It's a bit isn't it supposed to be an alternative to, say, the US dollar?
Yeah, I don't quite know. Because so when Europe have long since been trying to remove itself from Tether USDT, because when I came up, most of the crypto pairings were just with Bitcoin. So it was like Solana and Bitcoin, and that's how you traded. And then Tether's come into the market, and it's created a solid on-ramp for people to quickly convert their fiat currency wherever they are in the world into USDT, knowing it's pretty safe and secure and backed up by the dollar. And then they can trade with that with ease. And that's why there's so many great asset pairs in crypto now. And the European Union, of course, have been trying to move their assets to USDC and other things, and that all fits. It's just a different model, all that kind of stuff. But I don't understand just like a White House kind of released token, because all I fear is what you just said. In summary, just scared. That's it. Just afraid for the market. I don't think there's anything like it happened really in markets. I mean, have you got anything which might give clarity to that based on your experience?
Not so much. I mean, I'm kind of a little bit apprehensive about the way the current administration is behaving generally. They're disrupting as much as they possibly can. So I think, if anything, things will change. So that's the only thing I'd be a little bit concerned about with regards to what they're doing.
Yeah, absolutely. I mean, that's the thing. It's like, so if you're motivated, what are your motivations, right? Why are you doing it? And if it's to control, then, because there's a lot of people quite rightly consider the current administration as pro crypto, right? And I just feel like that's a dangerous premise. So yeah, we're not having lawsuits, we're not having stupid lawsuits and all these kind of things where people, that's good, that's gone. But what we need is regulation, not an administration, releasing, like, the Secretary of State has his own crypto token. I mean, what's that going to look like, right? I mean, Marco Rubio visits the Panama Canal and then his token goes to the moon. I'm like, what do we do with that?
Yeah.
So
yeah, but buy my token and you'll get what you want, kind of thing.
I mean, that's even scarier, door, right? But I just wanted to mention it because I think it is really relevant, and it's this sort of slow-moving potential takeover of a asset class, which concerns me. But I'm going to probably cover more of this later in the week on a separate video. But this is Bitcoin, and this is just a 2-hour chart. And just before I get into the fundamentals, just want to kind of just also Bitcoin ETFs, which have obviously been, over the last 2 years, the biggest catalyst for Bitcoin's movement as institutional money was coming in. I remember waiting for the first kind of US ETF approval for Bitcoin, and it was such a big buildup for months and months and months. And now we can use it as a barometer to kind of assess where the market is going, because it's such a huge amount of money, way above the usual whales and way above anything that retail traders can impact. Kind of making Bitcoin very, very institutional at the moment, which, that's a separate conversation. But so basically, Bitcoin ETFs are finally seeing some inflows after weeks of brutal sell-offs, as the global crypto market recorded a mild recovery. So US spot BTFs have hit an 8-day streak of inflows, suggesting that investors are gaining their confidence back again. And obviously, we've seen Bitcoin trying to recover by entering this macro uptrend and taking back the 1-day 200 MA. So this is kind of where we've been, and we've had some, this was the first kind of bullish move we had since, well, January really. And it's a bit difficult to perceive because obviously we've had like this move a few weeks ago was like 21% from Bitcoin, but that didn't really do anything for us because at that point we were really still above the 200 MA, and we had a bullish context, but so it wasn't really a bullish signal. It was just an attack of resistance which failed. But here now we've lost the 200 MA. This move here, where we've kind of had a good crack at breaking above it, and now we have, is really why the market's starting to move just a little bit, because it's the first proper signal we've had. However, we're stuck, right? You can see that, right, Howard? We're stuck.
Yeah, it's not going anywhere in a hurry, is it? It's trending higher from the low, but it's not. Again, as a bit like some of these currencies, they're kind of trending down, but there's no real momentum or follow through when it breaks a level. So as you can see, it's struggling a little bit today, and it might break that minor support level on the chart that you got there, and then we come back towards the trend line. It could be one of those things.
Yeah, no, that's a good analysis. Look, so you got to look at for people paying attention, you've got to look at two things in terms of a downtrend, okay, and the reversal out of that downtrend. So this is a bit janky, so apologies for that. So this line obviously represents a downtrend on the intermediate, which is kind of, you're looking at like the 4-hour, 6-hour, 12-hour daily chart sort of thing. It's not the primary trend. The primary trend is kind of represented by the 1-day 200 MA, which we're kind of still there. But this has been, representative of the downtrend. And we have finally broken out of that diagonal line. However, if you look at it in terms of basic trend dynamics, we've still got, lower low. This is still a lower high compared to this, right? So we're still in a downtrend. This is simply the first bullish signal, the break above the 200 MA, and now we've broken out. But there's so much resistance overhead. And I think the probabilities of this basic rising channel are about 70 to 80% that we're going to fall down. Now, we've got support still, because if the price action does this, right, there's still plenty of confluence bounce points to maybe stay in this range. So I'm not overly worried right now, because if we're above this line and we're above this line, we're doing fine. But how do we overcome this? Because this would be a move against probabilities. And typically when Bitcoin does that, it goes parabolic. But I'm not seeing that momentum. We look at the volume. If I just remove these events, the volume's not where it needs to be, right? We need something up here. So we need to retake this, and maybe just get out of this range, get up here, avoid this trend line, which is kind of coming up here, get a bit of just ranging attempt, maybe come down here, get a bit of liquidity, and then have a go. That's kind of what I'm seeing. I mean, do you see another pathway potentially?
Yeah, it seems to be kind of correcting higher along with the stock market. The key level, I think, on Bitcoin and the S&P 500 came the big support level on I think the 13th of January or thereabouts. If you go back on your chart, so that's kind of the double top level, if you will.
Yeah, yes.
So that it breaks high, and now it comes through. It does retest and stuff, and we're still below that level. That broke that kind of broken support level. So as you say, there's a lot of overhead resistance there. And those two highs on the chart that you're looking at, where we had those big kind of corrective bounces, they kind of came in pretty close to where that support level was, the double top level.
Yeah.
So I think you'd really need to settle back above there to think a major low's in place. It's a bit of a concern, the fact that it's rebounded from the low, but it's not doing it in a massive hurry. Whereas if you look at previous Bitcoin rallies from major lows, they tend to be, would be a lot higher by now in terms of price from the corrective low. It's almost like a begrudging rally, it's doing it, but there's no real, upside momentum, it seems.
Yeah, no, I agree with that. And I think it's quite risky as well. Now, this obviously, these signals, they will have an impact, but what people are really waiting for, as you said, is we need to get back up into this range. And when we get back up into this range, you know, with a not like, we don't want to see this, right? We don't want any of that nonsense, right? We just need, it needs a bit of time. But as you said, look, this is still a lower low, right? We're still in a downtrend. And what I'm concerned about when Bitcoin's like this, it's kind of tripping over a bullish signal. So it's kind of like it's accidentally given us a bullish signal just because it's so close to the line. But if we get any negative news of any kind, right, or the stock market, you know, reacts, then you know, we could very easily just, oh no, and we're back down here, and then maybe we get a slightly higher low, we start to form a bottom, and then we go. So I think that's and it's perfectly likely. But we've also got buyers looking to come in as well. I mean, I don't know what the market is thinking on this particular time frame. Let's just have a look. Indecisive for sure, with the bearish bias, as you said. You know, looking at this, let's look at the daily. I shouldn't really switch this chart to the daily because it's going to look to be, yeah, I mean, you can see indecision zone for sure. Let's have another look at chart and see some old charts. Just get rid of this and just see if we can get any more perspective. So yeah, because look, I mean, this Bitcoin 4-hour chart, we are below this this line here. This slightly different perspective. People, when you're paying attention, always try and get multiple perspectives, because then you can essentially be like, right, well, that chart's bullish, that chart's bearish, that chart's bearish, that chart's bearish, that chart's bullish, and you can start to do the math with the competing ideas, although it's a lot of work. So again, I think with a bit of downside to the 1 day and the point of control in this pattern for sure, maybe to find its footing. And if we've got this 4-hour coming in as well, that might allow us to, if we do something like this, maybe, and just then once the 4 hours down here, recoup and then just break out at a little lower level. But this is an easier move, right?
Yep. No, it does appear to be kind of, it might be late stages on this rebound. I guess you'll know once we start breaking through the minor support from a day or two ago.
Yeah, and I think the problem is as well, when you're breaking out here so close to resistance, how many buyers are turning up here if you break out? Not many, because the sellers are here. So it's kind of like, what the bulls need to see, and they need to see at least a level here. Maybe it comes down here, and then if we break out here, then bulls can enter, right? Because they've got more headroom before the sellers take control, which means we can attack it a little bit more. But coming from this level, I'm not seeing a breakout happening necessarily, and I think we definitely need to come back down here. But the problem is, if we do come back too far, we lose the 1 day again, and then we've got the bearish scenario, and then we're definitely coming down and maybe even lower, right? So lots of different ways Bitcoin could go at the moment, and it's just a bit of a waiting game. Just have another chart. This is the 12-hour, which we are kind of eking out a little bit more of a clearer picture, but again, still resistance overhead. We really not a great place for a breakout to occur. If resistance was up here and there's nothing here, but there is. But the advantage is, right, if we do get some bullish news and we're so close to resistance, it's an easy break, right?
Yeah.
So I don't know. That's where we are with Bitcoin. Let's have a look at the money flow, Bitcoin dominance, because this essentially is going to represent what the whole market sentiment is going to be about altcoins, right? And so with Bitcoin dominance right now, it's indecisive. It's just sitting here. It looks like if it breaks down, this is good for altcoin movement, right? If Bitcoin's sitting pretty, in fact, let me bring up this strategy image just for a second, if I can. No, that's not going to work. So let me just, I'll just stop my screen for a second, and let me just bring this up so I can explain what I'm talking about and bore everybody. Technically,
I'm not bored. I'm not bored.
Oh, you're too polite, Howard. So let me just, I'm trying to find one without a logo on it. There we go. We've got to stay brand content. What's the word? I can't remember. Right, here we go. Share screen. Thanks for your patience, people. Right, so just load this chart up, load it on top. Right, so These are the scenarios for the money flow. Now, this is how you can ultimately tell. We haven't looked at any altcoins yet, but we will do. This is how you can tell what the market's going to be doing. So essentially right now we have Bitcoin dominance technically it's ranging really, but it's unless we break lower, let's just, it's difficult to know what direction it is, but we're in a long-term uptrend, and currently we are putting in higher highs and higher lows, so let's call it an uptrend. So when Bitcoin dominance is going up, there's not many good options for altcoin movement like Ethereum or Solana or whatever like that. So when Bitcoin dominance is like that, so when we've got it going up and we got Bitcoin going down, which technically we are in a downtrend, that's not a great scenario for the altcoins, but it also is time frame dependent. So obviously primary in the long term, Bitcoin dominance is in an uptrend and Bitcoin is still in a downtrend, right? At least on the intermediate, right? Not necessarily the primary trend. So we're very limited in what altcoins could do. And this really, altcoins will move sideways and bleed slower if Bitcoin's going down and Bitcoin. So there's like, we're struggling to figure out even on this cheat sheet, what is happening, right? Because we're just sitting pretty and we haven't got any clear potential trend. What we want to see is we want to see Bitcoin going up, which will then, into an upper range, into these up to here, right? We want Bitcoin to come up to here, get through this resistance. There's another chart we haven't looked at, and then we want the money flow, Bitcoin dominance, to break down essentially. And then if that happens, that's the best case scenario for altcoins. But right now, we're kind of moving. We're moving between all three every different days, and it's very difficult to trade off, because this could be helpful when we've got clear definable trends, regardless of whether it's the 5 minute, the 1 hour, or the daily. But right now you're looking at these, it's like, well, we've got a macro downtrend, but we're in a primary uptrend, and then Bitcoin's doing the same thing. So no idea what's going on, but these are the charts to watch. And this, if you're looking to enter a long trade for an altcoin, this is the line. If we get a break here and we break down, that is your barometer that the altcoin is going to be improved altcoin trading, because this has actually resulted in some altcoins reversing a little bit and putting in some reversal patterns. But until we break down, and I don't know how you approach patterns, Howard, but my general rule is, if it's still in the pattern, you just presume it's going to continue in the pattern until it breaks, right?
Yeah.
And that's a simple rule. So even though it looks like it's breaking down, but if it does, that's your signal to enter. But really right now, if we go up, altcoins are going to get hit just a little bit, regardless of what Bitcoin's doing, because it's not doing much. So not great for altcoins at the moment. Let's just check in with Ethereum, then I can maybe pass back to you, Howard, for a little bit, and then I'll take over again. So yeah, this is Ethereum. We have managed to get back into this range, which is good. But you can see, as you talked about, there's just not any momentum. It's just like, oh yeah, all right, I'm going to sit here now, and that's it. Right? I'm going to see what happens. And this is so perilous, because any bullish, any bearish news, we're just coming back down, and then it might completely invalidate, and then it's weeks to get back in. Whereas if Ethereum had recovered like this, just as you were saying, Howard, then that is so much of a more bullish proposition, which traders can work with, because there's support below now. There's a lot of support right now. It's like standing on the edge of a cliff, and I don't want to be on a cliff, right? Standing on the edge of it. So it's going to be interesting. But the thing is, what essentially impacts Bitcoin dominance? Well, if we do get a move up here at some point over the next few weeks, the market will then start to move, because people will look at Bitcoin, they'll enter Bitcoin positions, they'll start entering, the high cap altcoin positions, and then that will move this downwards in principle, because more people are entering the market, altcoin market cap increases, and then this drives this down, then this acts as a signal for investors, and then it just cascades. That's just what we're waiting for. But yeah, here's just another Bitcoin chart, slightly different perspective. That is a different chart. Is that the different chart, or is it the same chart? No, it's the same chart. It's the same chart. So yeah, confusing picture. Any thoughts before I pass back for a few minutes, Howard?
Yeah, no, all seems to be a little bit confused. A weak rally from the lows, and it's struggling. pretty much where we are. So it could be maybe a you know, a sell into the longer term downtrend possibly. But I think you need to see it kind of break down a little bit.
I mean, yeah, you could like
definitely it's struggling. Yeah, it's struggling in this kind of region, isn't it?
I mean, and it's, you know, we got this 618 fib level as well, which is like a rock. You know, you can't beat maths. So it's going to be interesting what's going to happen. It could go either way, but you can see what most people are thinking. But we'll talk about some setups before we close. But thanks for letting me do that, Howard. That's great. Sorry I haven't got more clear answers for people, but some days it's like, huh?
Yeah, I know the feeling. Last few days. I got something on gold which might be of interest.
Oh yeah, good old gold.
Shall I,
always dependable.
Yeah, let's dive in there. Always believe in your soul.
What was Sam saying the other day? Don't mess with gold. I think he said on his shorts, don't mess with gold. Yeah, good advice.
Yeah, don't fade the trend. So this one a little bit like the about sterling dollar and euro dollar is that it got a little bit overextended a few days back, and we started to see some corrective action. So it's been a little bit boring the last few days. We had all the fun and games where it accelerated higher, and then a little bit of struggling up there, and now we're starting to see this kind of two-way action now. So I think it's going to be more of a time-based correction than a price-based correction, where it just kind of goes sideways for a few more days, and then eventually it starts to resume its uptrend. Elliott-wise, I think it's a fourth wave correction. We've had the first leg up, a minor correction of it, the big blast higher in wave 3, then kind of sideways lower in wave 4, and then I think we see one final push, maybe 3,131, before we can see a decent move to the downside. But until we break that high, I don't think we're going to see anything really aggressive to the downside. So it kind of ties in a little bit with what I'm thinking on euro dollar and cable sterling dollar, in that we're in a corrective phase. We're just going sideways before the buyers can step back in and have another go at the upside. So from a multi-day trading perspective, obviously intraday you can do all sorts of stuff from a day trading perspective, but from a kind of hold for 2 or 3 days, I'm waiting to buy into this thing once we start to see some upside movement. I think ideally above yesterday's high would be a good one. We've got that kind of long upper shadow on the candle where it snapped back. Today we're seeing a similar kind of thing, but no downside action. So maybe tomorrow we start to break through today's high and maybe yesterday's high, and that will give me the kind of trigger to jump in and to look for that push higher. On the downside, don't see too much below 29.80. Again, as we were talking about 128 on cable, I don't think it would be very healthy for this uptrend should we do much below 29.80, but I don't think we'll get there. That's the thing. I think it's more more time-based than price-based. So eventually we start to break higher. So just looking for the excuse to buy into it once we get some upside momentum. And it doesn't look like it's going to happen today. Maybe it happens tomorrow. So we'll see how we go with that one. West Texas crude, that's been quite strong of late. That's another one out of interest. It's interesting how it got slammed lower with the cryptos and with the stock market of late, but it seems to be a bit more outperforming on the upside. It seems to be starting to accelerate a little bit last couple of days. There's a big support level down around 64.65 on the big chart, on the major chart down here. That's the kind of invasion, Ukraine, double top, and then kind of bear market begins. Again, a descending triangle by the looks of things on the big chart. But I think within the context of that, we're seeing a bit of a response from the support line. If I could just draw that one in. So yeah, massive support down here. So it looks like we're just kind of heading high within the range, but lower highs all the way down, a bit like that dollar Canada one we were looking at. lower highs on all the way. So maybe it pushes up, but it's just a kind of for me a corrective bounce within this kind of downtrend that's shaping up, and it could be quite an explosive move to the downside when it finally comes, if and when it finally comes.
Do you think
it could all be accumulation for a push to new highs?
I mean,
I'd say no. I think purely because yeah, if you chuck in kind of fundamentals, obviously that the Ukraine invasion, that really was a major event which kind of, the market rallied on, and since then the war has continued onwards. We've had stuff in Gaza, we've had all sorts of things, trouble in the Red Sea with the Houthis and all the rest of it, all these things that could possibly have seen crude oil at much higher levels, but for whatever reason has not. Maybe it tells you something about the supply and demand picture for crude oil.
As a former resident of Venezuela, and obviously there's been some serious threats coming out of the United States with regard to anyone buying crude from Caracas. And I haven't got the figures, but obviously Venezuela is a big producer, or at least should be if everything worked, which it doesn't. I mean, what kind of impact do you think that would have? I mean, because obviously there's a reason why the West, to a degree, still under the table has a bit of a relationship with that administration, with drilling and oil and all that kind of stuff. But I thought the suggestion, about we're going to punish people who buy the oil, I was a bit confused by it. I mean, principally I understand it, but I'm just, what kind of impact do you think that would have?
Yeah, I guess if it takes supply off the market, then it should be bullish.
Yeah,
but I don't know. In the grand scheme of things, I'm not sure what percentage of the world market is Venezuela.
Let's find out. Let's not leave that question hanging. Let's crude output percentage supply Venezuela. Let's have a look. I don't think oil prices climb in Venezuela. Whereas, okay, what percentage of the world's oil comes from Venezuela? 18.2%.
That's quite a big number.
It's bigger than Saudi Arabia. Yeah, that surprised me.
Yeah. So yeah, you'd imagine that would be supportive for crude, or everything else being equal.
And just could you explain perhaps the how would this impact prices at the pump? Right, higher crude. How would that impact prices at the pump?
So, well, technically, they like to raise the prices of petrol when crude oil goes up. What do they say? It's up like a rocket and down like a feather.
Yeah.
So when the crude oil comes down, then they're not too quick to lower the prices at the pump. Also, I guess you've got tax in there as well, haven't you? Government.
Certainly in this country where I come from, there's tax. All of it's tax.
Yeah, so it might not be that related to the spot price, but certainly a higher oil price should be quite bullish for petrol prices, I suppose.
Yeah. Oh God, it's trying to make sense of what's going on at the moment. Honestly, it's trial by fire. Yeah. Okay.
Yeah, it'd be interesting to see, this chart when the invasion kicked off in 2022, and the price of petrol at the pump. I wonder how much lower the price is in comparison to how much lower crude oil is. I mean, crude oil is 70 as opposed to, what is it, 128, 130. So that's a massive decline percentage-wise.
Yeah, we can look into that. I think that would be a good question to answer another session. Yeah, because I'm always trying to think, like, how are things impacted? Because the problem is when things go a bit bananas like this, we start to see paradoxical things happening, right? And I'm always aware of it makes sense, like, oh, well, if this happens, it's supply and demand, and this is going to go, but there's so much happening, it's so, because obviously you're looking at that list of producers, which I just mentioned. Canada's on there, right? And we're having a lot of problems. And I imagine Canada supplies in the United States a lot. So I don't know. I just don't know. Welcome to the stream, everybody. We don't know.
Yeah, it's funny what you'd expect to happen with the market, based on a particular event doesn't always happen. Isn't necessarily so. That's why I think you should be using charts to a large degree. It gives you an idea of where the sellers and where the buyers are. Yeah, I think trading purely on fundamentals alone is not the best way to go. It's nice to have something to back you up, particularly on longer term moves if you've got a fundamental driver. But it can be very difficult trying to figure out what are the drivers of the market. And certainly on the currency side, interest rate differentials, that's one good driver. Sometimes, other times it's risk factors, safe havens, that kind of thing. Then you've got current account deficits and all the rest of it. Sometimes you've got political movements. So there's so many different things that can go into trying to figure out which way a market should go fundamentally. So you can almost get a big headache. I think you should couple it with looking at charts, supply and demand.
So I think so our advice to everyone today is, how do we, because I imagine everyone's having the question, how do we make sense of this market? Our advice, guys, is take a paracetamol. Right?
Absolutely.
Anything else for us, Howard? That was great.
Let me see. Andre's popped up with another question there for you, I think.
Oh, okay.
What's the impact of Trump's tariffs when they are signed on April 2nd on Bitcoin and dollar index? What to expect?
Okay, so well, I'll accept the premise of the question. I think trying to suggest that, I mean, look, any typical thing, you say we're going to do something and then you do it, right? And then we can measure the impacts and we can trade off it, right? But when we've had stop, start, more tariffs, less tariffs, 100% tariffs, no tariffs, a pause on tariffs, every other day, it's a different thing. So that's the problem. It's not so much, I mean, when you look at tariffs, if the tariffs go into effect and they are held, then of course that is going to result in inflation. It just will. And that will see the Fed in the United States being very hesitant to lower rates, which is what we need. And that, of course, will weaken the dollar. Now, that is actually good for risk assets. So we're talking about paradoxical reactions. So a weaker dollar is good for the altcoins, for sure, which haven't had their day in the sun. But we don't want the dollar to just, I was talking about this with Igor the other day, we don't want the dollar to just go straight down like a stone. What we want is a simple downtrend of, down, up, down, up, down, up. That's what we want. That's how we can manage it. Anything going up and down crazily because of uncertainty, even though risk assets benefit from a lower dollar, they're not going to benefit from a dollar which just crashes, right? Because that's just fear everywhere. So if the tariffs go into effect, delayed inflation, the dollar may come down, but it's highly unlikely that just the dollar coming down by itself is going to change the market sentiment, because obviously, Sam, hello. Oh,
hey, Sam.
See you, Sam. Good to see you. There's so much to take into effect, because obviously, just like with any trading, you're not going to trade on just one signal. So we're not going to say the dollar is going lower, therefore it's time to start buying your altcoin positions. No, that's not enough, because the dollar is, we want the dollar to kind of naturally come down. We want it to be natural cycle movement, right? Not fear and uncertainty. But I see more chaos. I see more chaos and not really anything bullish happening with BTC if the tariffs continue. What the whole world needs, all the markets need is stability and certainty. So I would rather the tariffs went into effect and they just stuck with it and stopped changing their mind, because then we can deal with it, right? We know what our lot is and we can go away and trade for it. But when it's like on or off, on or off, on or off, new prime minister in Canada, on or off, it's difficult to trade. So nothing good is what to expect, I would say. But let's hope they don't come into effect. I hope that long-winded, ridiculous answer helped, Andre. I mean, anything to add, Howard?
I'd say can't be very good for the dollar, really, if uncertainty is coming out of the US administration. You know, you're on, you're off, you're on, you're off, whatever. It can't be good to be holding US assets if you don't know what the future holds, you know, if you haven't got any certainty. So I guess it dovetails a little bit into my kind of bearish dollar view, but it would seem to make sense. Uncertainty is not good for an asset class. So I would say dollar negative if they continue down the same path in terms of you know, just basically threatening world trade and disrupting everything that they can disrupt.
Yeah, I think that's a very good point. You know, Bitcoin was created in the as a result of the 2008 financial crisis, and it's for a time it was fulfilling that role. You know, just before kind of a lot of mainstream adoption with the ETFs and everything, it was starting to become an asset class which people could trade and could benefit from holding outside of whatever was going on in the rest of the world. But since the institutional money has come into it, it's almost, it feels like it's become more pegged again to traditional market movements. So, you know, if the S&P is going down, regardless of whether the dollar is good or bad for crypto, nothing's going to change, because ultimately they're human beings operating in a very uncertain market, and they're not going to invest in Bitcoin. There's going to be institutional people coming in, as we talked about just when we're looking at the news, you know, buying up. There's a lot of public, you know, the amount of Bitcoin which is being bought up by public institutions, as well as, you know, these ETF funds, is off the charts, and it's starting to pick up, and that's what we need. But is Bitcoin going to separate itself completely from the market and then allow it to be a store like gold? I'm not seeing it right now, especially not with news coming out like, you know, the governments are trying to launch their own stable coin, which is essentially just getting their claws into the market to kind of have their piece. And that's going against kind of the outside, separate from the economy Bitcoin model, which, you know, Satoshi trying to come up with. So it's a very deep question, really, about what to expect, because in chaos, Bitcoin is supposed to save us. Right, it's supposed to save us, but right now, because it's institutional money, it's not doing anything much. So, yeah. Right, shall we have a look at some setups, some exclusive setups for All Prime Crypto? Should we do that, Howard? Is that okay with you?
Go for it.
Right. So for anyone who isn't familiar, we have a new YouTube channel which is dedicated to crypto coverage, and we'll talk more about that another time, but check that out, hunt that down if you can, and we'll be posting regular setups like this to help you trade. So these are a couple of things I was looking at yesterday. This was WLD USD, just 2 hour, and I was not a big fan of this setup because of this kind of divergence between the 200 MA and the price action. The issue is, of course, when you're looking to enter a trade, so this is obviously a lower range, we've broken out to an upper range, and you buy the retest, and you've got nice confluence around here, right? But because we've got this moving average, you know, not hugging this diagonal trend line or not providing confluence, if you come in here and you try and buy this support level, right, it's getting a bit away from us at the moment. What will happen is, if it goes wrong, you're going to come in here and you're going to get essentially stuck. So new buyers might come in on the 200 MA, but then there's resistance now up ahead. So it's a little bit perilous, because if this support line breaks, we're really going to get stuck. So for me, I don't like this. If this 200 MA had been right against this line, then it's an easier proposition, right? Because it's buy here, lots of support, and if it breaks down, we just get out. But right now, not working for me. But this one, move, excuse me, sorry about that. Move is much better. And let me explain why. We've had this downtrend. This is the 4-hour chart for this particular token. And we've had this pattern, which we've broken out to the upside. And it has broken out with a little bit of volume. When you're looking at volume, you want to compare it to what it's been for the last few periods. And this is the highest volume we've had since January, which again tracks with what Bitcoin's doing. Bitcoin puts in a bullish move, and then the rest of the market follows. And we've had this lovely breakout over the 200 MA, this resistance line and this resistance line, and it's broken up to the second range above, which is obviously much more bullish than just popping its head out here and just stopping. So this has been a nice solid bullish move, and now it's coming down to do a nice retest. And if you're looking for a long trade, then obviously based on fundamentals, you know, just coming in here and trying to sweep up the price action is trade. But based on the fact that we've got a lot of support, it was a strong breakout. And then because we've even broken above this range, you could argue that a price target for a long trade from this area could be all the way up here, right? Because we've already kind of had a break above it, and that would be a quick sort of 40%. But I would definitely want to see a bit more from Bitcoin before I excuse me, I don't want this tool. I definitely want, oh my god, get off, I'm trapped. So if you were thinking of this trade, bear in mind that Bitcoin is still in a downtrend, everything me and Howard were talking about earlier. So if you do manage to get a nice position here coming into this area, basic retest entry, then you're looking at maybe just taking profits at the next fib level, just to be cautious, right? Because I'm not seeing necessarily a strong move from here. Oh, I can't do it. A strong move up here onwards. So probably just buy the retest, maybe a little range trade here, but obviously use your own risk management. You could scale in here, scale in here, scale in here if it hits the moving average. But the good thing about these triangles, which we were kind of talking about earlier, is they're very easy to manage, right? Because it's very simple. If the price action comes back down into this pattern, your trade's invalidated, right? And you can think about your risk management. You got places to put it. You can put it here. You can put your stop loss here. Lots of options, which is why this is potentially a good trade with move, putting in a move. Any thoughts on that, Howard, from your perspective?
Yeah, it's making higher highs and higher lows. I think I'd want to see it stop falling. It seems to have rejected last few days, so I'd want it to kind of like stop falling and make a bit of a base somewhere above that that trend line, and then I'd think about having a crack at the long side. But at the moment, it seems it's kind of spiked up and done the long upper shadow a few days back. But I think if it holds next few days, then it could be good to have a crack on the long side.
Yeah, and I think this is the negotiation, right? It's like when we're looking at this, when I'm looking to make a trade with altcoins, right? I'll have 3 or 4 setups, and I'll just choose the best one. Like the stock here is cooking. We've got a bit of divergence though, but this isn't working for me, right? This break would be devastating, right? And it's a bit confusing for traders. Whereas here, I mean, if we zoom in, right? Lots of volume, right? Volume should be your guide. And then you can see there's not much selling activity by comparison, which can give you an insight into what the market's thinking. And it's not like it's at a particularly high level either. This is just the next range up. It's just had nice confluence. So that's what I really like to see. You could obviously, if you want to look at price targets, you could look at different time frames and see what's going on. But you know, keep it simple for me. We're at the bottom. We've had a nice breakout. It's a pretty straightforward first kind of change of character since we've had this move lower. But yeah, what Howard said as well, you might want to wait for a little bit, just a little bounce, maybe just a little bum, you know, just putting a little double bottom or something in dependent on your strategy, right? Some people will try and front run that, but I mean, you could scale in, scale in here, and you could maybe, you know, even scale in here again at the lower end, you know, because we've had a bullish move. But you know, lots of options to trade there. Just make sure you're considering risk management and keep paying attention to what Bitcoin's doing. This is also, I've got too many charts loaded up. It's not great. Let me just shut something down. Yeah, I'll shut that one down. So this is one we're looking at in the video yesterday as well. This is ENA, and so far, the premise of this trade I was suggesting was we got multiple options, but not to buy a breakout here because we're too close to the target area. We're just talking about that with Bitcoin, right? You don't want to be buying breakouts in the middle of a range, okay? And you could say, you know, there's two ranges here, lower and upper, but this is it. And ideally, as a trader, you have to ask yourself, what do I want to see from the price action to enter? I want it to come back down into this support zone, right? So Bitcoin looks like we might push the market down over the next few days. Bitcoin dominance, which we looked at, also is at support, which means that we might get a bounce, which is not good for altcoins, and that might push it down. Well, my tool's not working either, so it might push it down into this support area, which would be a front-running buy because you're still in the pattern, but it's a great place to buy in terms of managing risk, because if it breaks down, it's going to come back up for the retest and you can get out. So trying to buy support here, which capitalizes on potentially a bit of bearish action from Bitcoin over the next few days, and then scoop it up there. And then maybe if it breaks out, you could then scoop it up again here on the retest and then just move to this target area. And if you manage to catch the bottom, you know, easy 46%, you know, nothing to shake a stick at. But the good thing, and this is the general rule, always the rule, right? When you're looking at this ENA setup and you're planning your strategy and you're thinking, you know, where am I going to enter? What's my plan, right? Some people might enter here. Other people might wait for down here. Whatever you're going to do, that's fine. But when you enter low and support, it gives you options for risk management, right? It just, because whatever happens, that line will no doubt be revisited by the price action very soon, regardless of a bullish or a bearish move. And that then gives you options to exit or entrance. So not buying here, people. Don't chase it. Let it come to you. Any thoughts on that, Howard?
Yeah, just very, very kind of choppy here. I guess looking for a bit of an upside break. So it's not doing anything which is different from the context of what we've seen the last few weeks by the looks of things. Like it rallies up, it comes back down again. I think I want to see it settle above those last couple of lower highs that we've seen on the way down. That would start to look a bit more constructive, I think. And then, as you say, you've got a lot of upside once you confirm a new bull market.
Yeah, and this is negotiation, right? This is ideally what you want to see, right? You want to see a strong bullish move which confirms the trend change. However, also you can't ignore the fact that the price action is approaching support, right? And it's just a good entrance, right? Just to enter these areas, because even if it goes wrong, you've got lots of buyers coming to sweep it back up. But so, you know, you could wait for the pattern to complete, because obviously it is a descending triangle, which is technically a bearish pattern. But as we talked about with triangles, right, they're so easy to manage, right? So you're not going to buy the breakout here. You don't have enough confidence to enter at support, right? Because you're kind of front running. You're presuming the move's going to happen, right? And you're entering because you can just manage it. Or you can just wait till the completion of the pattern, if you get that, and then just buy the breakout, right, at this lower level, but not here. And that's the negotiation. Like, your strategy might be, I need a confirmed higher high before I enter my trade, then I'll enter the retest. That might be your strategy. Other people's strategy is to front run these moves in the patterns, maybe with a bit of divergence down here, and then they'll do that. So whatever's in your risk tolerance. But a couple of solid setups. And this is, we've got a couple more today to have a look at, exclusive to this live stream. You're welcome. So this is SEE. It's USD actually, because that's the trading pair on Holoprime. So let me just correct that so there's no confusion. Yeah, this is the 12-hour chart, and this is not. I mean, Howard, do you want to have a crack at this first?
Let's have a look. Yeah, let's see. So yeah, broken a trend channel to the upside. Starting to look positive, I would say. A big support down there. Yeah, could be worth a shot on the long side. Starting to look quite a bit more constructive, isn't it? It's basing at support.
Yeah, I mean, the reason is, so we've got this level down here, right? And we've broken out, but we're running to resistance. So no one's suggesting that this would be a viable trade right now. This is just the first signal we've got. But obviously we're running into, if I zoom in just so you can see, right? We're banging into resistance on this level here, right? We've got support down here as well. So there's buyers here, there's buyers here. So we're probably gonna, anyway, and the point of control as well usually acts as gravity for the price action. So, you know, but this isn't enough to enter. I wouldn't suggest entering here. What I would suggest is, as we were just talking about, I can never find the tools I want. We definitely need to follow Howard, your advice, which is we need to see a strong move in here first, right? And then try and then scoop it up then, perhaps. But difficult negotiation, right? Because once you leave this area, you're losing this kind of support, and then you've got this moving average coming in. So this might be a trade to watch to see what happens. And if we get a move like this, like ideally changing the character, and then we kind of have a bit of downwards action, then that might be what you're looking to enter. If you can get some confluence from somewhere else. But obviously when we're providing these setups, we're showing you that there's tokens with potential options, you know, potentially going to show us options to trade. You know, we've got this breakout, but we need to see a bit more really. This is concerning me a little bit, and this is the 12-hour chart, so this is pretty significant. But you know, the trade might be just to here, but we need some more bullish confirmation. I mean, anything else you'd be looking for, Howard?
No, I think just maybe like the other one we looked at before, kind of to have a stab at it around current levels. I'd want to see it spend a bit more time here first.
Yeah.
So just a bit sideways, and to show that the buyers are stepping in at higher levels.
Yeah, maybe you know, something like this. Maybe. Yeah, it's not quite there yet, and yeah, because I mean, look, here's the thing: you've got to think about what happens if, because we're talking about Bitcoin, and we're thinking that the next few days we could have a bit more of a downwards move. What's this going to do to this? If Bitcoin dominance bounces and Bitcoin dominance goes up, that's going to create that nightmare scenario which we were talking about with that cheat sheet, where Bitcoin dominance is going up and Bitcoin is going down, and this will then just do this, right? And we're not trading that. So we need more. And when you're looking at these setups, never lose sight of Bitcoin as the factor, because I say, right, I need to see this from this trade, at the very least, a firm flipping from resistance to support. But I also need to see Bitcoin dominance break down from here for a long trade. And I also need to see Bitcoin get out of this first, right? So if you have those additional two criteria before entering your trade, the conditions you need to get what you want will probably happen. And so this is the negotiation. Never enter an altcoin trade ever without looking at what Bitcoin's next move most likely will be, and then what BTCD, Bitcoin dominance's next move will be, because that will determine, you know, what this trade is going to be. Right now, there's no trade, but it's setting up potentially, I think. And then finally, the crypto OG, we've got Solana, and slightly better picture, I think, right? Because we've the 4 hour firstly is a pretty decent time frame, and you've got the 200 MA coming down, and we're, you know, so, you know, we've got more of a bullish context. But again, look, we're so close to resistance, so this isn't really the entrance point. A bit of a confusing picture, because obviously if you think about it, if we get some bearish moves now, we're going to lose that 200 MA, but then we're going to enter this pocket, and this pocket is nice. This is nice because we're at support. It's the 618. We've got confluence with this trend line, and it would be a good place to enter. And again, you know, you got to think there's buyers here because of this confluence, and then you're at the bottom of the range as well, which is manageable if it breaks lower, and you've got additional support if it does. So this isn't the trade now, even though you have got a bullish signal. It was definitely probably I've got to stop saying that, such a ridiculous statement. We want it to come down.
Definitely, maybe.
Maybe, certainly, maybe, if. So this is probably the area you want to start looking at, right? And then if Bitcoin does push this down, and then Bitcoin arrives at a floor, maybe around here, you know, and it shows signs, or even a breakout, then, you know, I mean, if Bitcoin does this, it does this, and then does this, and then does this, you know, there's a good entrance point for a long trade with altcoins, because we've now got another bullish signal, and we're at the point of control. Then we can move up, and we're not so close to resistance. So this is what you need to be thinking when you're doing these trades. And so we're not there yet. Some people will try and buy this, but I'm not buying it right below the 0.5. So as you can see, my instruction for this trade at least the bare minimum you want to be looking for is you want to watch for a break of the 200 MA, which we've got, and an upper 0.5 trend line break. So we essentially want to see this, right? So we want to see this, and then you've got a long trade potentially because you've got the 200 MA supporting you. Or if your bearish scenario would be to wait for this pocket and then trade this range. But obviously, what your strategy, you know, what you're looking for divergence. However you work, make sure you're enacting it. These are just setups based on TA. Trade them any way you like. But Howard, thoughts on that? Because you're making some fantastic points.
Yeah, again, as with the other ones, I think it looks constructive, but I'd want to see it spend a bit of time at these higher levels, so that when we get a downdraft, if we get a downdraft coming from Bitcoin or whatever, it doesn't take it to new lows. It sees a higher low. So I think, yeah, constructive, basing at support, but I'd like to see a bit more time spent before, you know, diving into that one on the long side.
Yeah, I mean, because this is good support, right? This is good support. So, you know, if you're coming up here, you're waiting for a break above here, as kind of suggested, that's fine. But if Bitcoin's still in a downtrend, how much further up do you think it's going to go, right? We're probably going to range for a while. So, and if we're going to range for a while, we're coming back down here, and then that's the line to come into, right? So, you know, you could theoretically buy in here 25% of a position, and if it comes back down, buy again, and then if next time, buy again here, right? But we're not quite in this bullish context yet. We're not going to see this for a while. We need to see more from the money flow. But just a couple of setups to have on the back burner. Not our top altcoin picks, but just some setups we've been looking at, mainly to just discuss how we should be approaching trading. I don't think can't see anything else. A lot of people say to me, like, a lot of your charts are quite clean. And what I'll usually say to them is, if your chart becomes a mess searching for a trade, it's not going to be a good trade, right? Because you're trying to convince yourself that there's something that's going to happen, right? So I'd like to keep it simple. And if fibs are relevant, it's relevant. If they're not, I won't have them on the chart, because ultimately, you know, it's a basic breakout of a downtrend, and we need to see a higher high. We haven't got it yet, or we need to come down to this support for a controllable entrance. So, you know, it's a waiting game. Never, ever do a chart and enter a trade straight away. It should always be, this is what I want to see from it, and then let it come to you. At least then you're in control. So a couple of setups. So that was Sol, SEE, yeah, okay. And then we've had ENA and Move, which are better kind of setups. And we're just waiting game for Bitcoin. I mean, looking at this chart with Bitcoin, nice little pocket here maybe for buyers. You can see they're trying to sweep it up, but yeah, a lot of red. So that's me, I think.
Okay. Good job. Good job. I just wanted to be, obviously, before we close, not markets I'm intimately you know, doing every single day, but just something that's come up on the stock markets. And stock market obviously been a little bit linked to Bitcoin, hasn't it? It's been risk on, risk off kind of thing. So a bit of a worrying development today from a long perspective, the breakdown on the NASDAQ and the S&P. Let me just present. There we go. Okay, so this is the NASDAQ first of all. So obviously we had the downdraft from the swing high, stabilization, and then a kind of an attempted rebound. We are struggling at the well, we've not quite reached the top line. Is basically the double top breakout point, which was the January 13th low. And a bit lower down, you've got a kind of an old support level in the previous uptrend there, which we kind of have stalled at. So it seems that we are struggling in a very important resistance zone. I think Sam, he'll be on a bit later on, I think, he pointed out this kind of zone over the last day or two, that he was looking to maybe attack it from the short side. And I think he's probably having a great day today. I'd imagine. He'll tell you later. But yeah, nice rejection from a very important resistance level. Could be the start of something bigger on the way down, maybe a resumption of the decline that we've seen, or maybe just a retest of the lows and we base. But certainly for the time being, it looks to be quite negative on the NAS. S&P, a similar kind of idea there, whereby we have actually sort of retested the double top level. In fact, I think that was I think Sam was talking about the S&P rather than the NASDAQ. Yeah, so a similar kind of thing, a run up, and we're struggling at this kind of double top level. And we're starting to break down a bit today. So could be early stages of a resumption of either the downtrend or a kind of a retest of the lows before we base out and the buyers step back in. But right now, it doesn't look to be great to be holding long positions, I would say, for the stock market. And if it does do, it goes in lockstep with Bitcoin and some of the others. Maybe it's a bit of a negative signal there if you're seeing that kind of risk on, risk off kind of idea. Is the Bitcoin move starting to go yet, or it's not really moving?
No.
Not so much.
No.
Okay. Because yeah, I mean, for sure, we the downdraft in the stock market and the recovery, they've kind of gone, roughly kind of together, I think.
Yeah.
So it'd be interesting if this does start to, accelerate. Maybe that does that is a bit of a catalyst for the cryptos, possibly. So just something to watch out for.
Yeah, for sure. It's Bitcoin typically has its phases in the past where it pegs itself to the S&P, it pegs itself to the dollar, like multi-month kind of pegs, and then we all turn our attention to, as traders, looking at the S&P, then we're looking at the dollar. Right now, I do not know what it's pegged to. I don't. All I know is that if you just look at this behind me, this is a little bit out of date, but we look at Bitcoin chart, which is the actual price action is below the 1 day. It has been below the 1 day 200 MA, but on the CME Bitcoin chart, it's never lost it, right? It's never lost the 1 day 200 MA, which can give you a little bit of an insight into what's happening in the market. And just as we approach the finish, I just caught this news item. So Bitwise has just announced, the CI says that the firm is extraordinarily bullish and they definitely see Bitcoin reaching at least 200,000. Now, statements like that, I mean, they're for their investors, right? So we shouldn't take too much solace in that. It's like, yes, come and join us, Bitwise, because Bitcoin's going to 200,000. Buy it now, you'll make all the money. But I think I do support a bullish context. But just like, I mean, have you traded more difficult conditions, Howard, before?
Yeah. Yeah. When there's some really big news things going on, then you can get some really unpredictable stuff going on over the short term. I remember trading through the Swiss franc crisis when the SMB decided to stop supporting the currency. Also during the Greek debt crisis as well, there were some pretty feisty moves then. Things got really hairy for a week or so while things were in the offing. Decisions were not yet made. It's just, if the market's waiting for something, there's something big coming up, then very often you'll get kind of swings, some big swings either way, that you can't really make a whole lot of money on. Unless you're really nimble. So it just depends. Market conditions, either they're trending or they're choppy. And if the market's choppy, then I guess either you stay out or you look to play the overbought, oversold type things. Sell the top of the range, buy the bottom of the range. And if markets are trending, then you look to buy the pullback kind of thing. But at the moment, I think there's a lot of indecision about.
Yeah, for sure. I mean, maybe we end on this note. I remember sitting at my laptop when Bitcoin was $3,000, right? I had the money to buy it. I ended up buying it at 6, right? And that was like the pandemic crash, right? Everything is red, everything is confusing until it's not, right? And I remember saying to myself, it's $3,000. It's like, it's so close to zero. I'm like, this isn't good, but I wish I had bought it. I wish I had bought it, right? And realize that, the pandemic is going to be over. There will be a recovery. There will be stability. But I think the question is, if we're waiting for world peace, how long will we be waiting? So
yeah,
I don't know.
No, exactly. You've got to, in the long term we all die. So you've got to play the trend as in your time frame. Nice cheerful note to end on.
Yes, the market is making us consider our mortality at the moment.
Absolutely.
Howard, it's been fantastic to see you. I hope to see you in a few days' time. Thank you for your insights. They're very helpful for us crypto traders, your experience. So good stuff. Thank you so much.
A pleasure. Just before leaving, Andre's he's looking at talking about sterling cable. UK GDP on Friday could be the catalyst for cable to rise. So yeah, I'm looking for it to rise from probably current levels. So maybe that could be the trigger. Maybe it happens tomorrow. We'll see how we go.
Yeah, Andre, great questions. Thank you so much.
Thank you.
See you all later. Thanks, Howard. Take care.
Take care, guys.
Hello, everyone.
Hey, hello, everyone.
Hello.
Hey, Michael. Hello, Aymane. How are you again?
I'm good. And you, Sam? Michael?
Yeah.
Nice to meet you.
Very good.
You as well. Nice to get you on. It's a pleasure.
Thank
It's a pleasure. Long
So,
time no
Michael,
see for you, Sam.
Yeah.
How was
Hey,
your trading
Robert's in the
session?
chat. Pretty good today. Pretty good. Managed to get a really nice short position on the S&P 500, which I recorded.
Yeah.
So I'll be showing that a bit later.
I saw yesterday, I think, your session, and you predict like the sell move, if I remember.
Yeah.
Like you,
Yeah. I mean, from Friday, I said, no, Monday, I think it was, when we hit a certain level, I said, from the next few days, I'm looking to only sell the market.
Okay.
So I've had a bearish bias now.
Okay, like your zones, you are based in your zone on the void, on the like low volume node, let's say.
Yeah, pretty much. Yeah. I'm looking for trapped volume, basically, like a lower volume trap between heavier volume. Yeah.
Okay.
Yeah.
Interesting. Yeah. So if I can share my screen, I will just explain,
Please,
if it's possible, few concepts, how I trade and how I see the market,
that'd be
and
awesome.
then we'll take it from there.
And Michael, just to let you know, Aymane's a fellow futures trader, like myself.
Nice. Okay.
So
sweet.
Yeah, we
I'm
might be ganging
excited
up on
to
you
see
this
how
time.
you guys look at it.
Joking. No, it's all
Nice.
good.
Yeah, not too much action for me going on today, guys. I had a beautiful opportunity on Monday. Crushed gold. I took a small piece on Bitcoin yesterday, but nothing for me today. So by all means, you guys take lead on today because it wasn't really much going on for me today. I was all cash today.
Okay. So I want first start by explaining some few concepts that I am based in my strategy on it. So those concepts are based on the footprint. So I will explain like each one alone, and if you have any questions, and let me know your thoughts also.
Sounds good.
So here let's start by the first, let's say 2 candles. Let's say we are going down. Normally, let's say in the ideal situation, normally the current candle should respect, if we are going lower, should respect the previous high of the candle. But sometimes, like what we see is like we see the price go higher and we break the previous wick of the previous candle. And then let's say in fraction of seconds, like couple of seconds, we see something happen here and we push the price lower and we close bearish. So for me, like I start like noticing this thing happen, and I see on the footprint that like when something happened here, like some big orders enter here that push the price lower. So the way I let's say I see it is, okay, maybe there is, if the price pushes lower like directly, it means like there is some market orders there that were activated. So for me, this is really interesting area to look for. So of course, I have to see the context. There is few things that it should add on. It's not just those few candles. But yeah, so this is like for the bearish example, for the bullish example, the buyers, the same concept. Like in fraction of second, like we see something happen here and we have this push. So the same thing here, like just to explain the direction, how I see the direction when I trade. So first, like I wait 3 minutes until, let's say, the New York open, and then I want to know just, let's say, what's the next 15 minute candle will do. Like to make money as a trader, you don't need to, for me at least, I'm sorry, like you don't need to know like what will happen all move. You need to know just if you are a scalper or intraday, just what's the next hour candle will go. So and for me, like let's say the wick of the candle will show me like the next 15 minutes, 30 minutes candle will go. And as I said before, it depends on the context. So let's say here in this case, like we have this green candle, big green candle. So we took this previous week and we close here bearish. So for me, I anticipate, like I say that next candle, maybe we are pushing lower. Plus, like on the footprint, I see the absorption, I see a few things. So same thing like for this example right here, like big, very like my A plus setup is big candle, and we close here. We take this low right here, and we close bullish, and I take the buys from here.
Yeah.
So yeah, this is the main concept. So I prepared some screenshots just to explain some examples.
Oh, perfect. Very well prepared. Screenshots.
Okay. Yeah. Nice. Nice.
Awesome. And we have Robert back in the chat. Robert, it's good to see you again. Yeah, I haven't seen you in a while, Robert. So it's good to see you back on the third session.
Right.
And Michael, you do have a question by Andre, but we'll get to your question in a minute, Andre. Okay.
I want to share, but I'm facing some issues.
If it's an image, you can share your entire screen and then just have the image up. But do bear in mind your entire screen will be shown.
Maybe, yeah. Okay, perfect.
Yes, we can see.
So this is like the NQ chart yesterday. So we had, let's say the New York Open was here, this candle here. So I have my zone. I draw my zone here. So my zones are based like the same concept. So we took this previous week here, and we closed right here. So for me here, like there is something happened here. So when I check the footprint, so you can see like we were going higher, and here we have like big volume with negative delta, and then we continue higher. So for me, this zone was really something happened here. I don't jump to the conclusion right away, because you never know if it's buyers or sellers at the end. So, but you have like to accumulate few concepts and few things that you see, and then you take your decision. And then like the A plus setup happened here. So on the 15-minute candle, we saw like big clusters here and at the bottom of the candle. So for me, when there is like, let's say, big cluster in the bottom of the candle, normally, like logically, I want to see direct continuation. So when I see sort of like there is no move to the downside, so for me I say, okay, the sellers are
trapped.
They getting trapped, absorbed, and then like I start looking for buys. Yeah, so this is like the few things I am looking to base my decision. And yeah, well, what you think, Sam? I think Sam, you are trading similar.
Basically, very the exact same concept. So this is like music to my ears. You know?
Right.
But I'll share my screen real quick. All right, let me hit present and let me share the screen. So a bit annoyingly today, I got in such a good trade, but I had to get out really early because I had a podcast planned with Michael and Walter, and I didn't want to be in the trade whilst in the podcast. But essentially, I sold right at this tip here. My trade, I do have it recorded, so I'll be going over that in a minute. I basically sold around here, and sadly I had to get out around here just before the hour ended. My take profit were the second low, so this low here, was my take profit. That was my original take profit. It did smash it very easily, but sadly I did have to get out here due to a podcast. So you know the things I'm doing, right? Sacrificing my trade for a podcast. But it's all good. It's all good. I'm still happy.
So the podcast cost you a few thousand.
Oh dear. when you put it that way, it's sad, but I'm joking. It's good. It was a good podcast, and to all the viewers, definitely keep your eye out. It will be coming out every Sunday. There's a podcast coming out. It was a very good session, so I'm sure the viewers would like it. But essentially, again, I had a very, very strong bearish bias. I've been saying it for the last few days. We're dropping. We're gonna drop. We're gonna drop. Didn't quite drop properly yesterday, but we slowed down. We ranged a little bit yesterday, right? And the reason we're dropping is this big area here, right? And I've kind of narrowed down the exact area within that area where we're going to drop. And that's, again, down to the gaps in volumes we're seeing, right? So the moment we got to these areas, I knew market open, we're going to drop. We're going to drop hard. So I'm just looking for any indication that the sellers are doing the same thing, that sell pressure's coming in the market, because we're not breaking above this just yet. I'm not saying we're going to enter a long-term downtrend, but we are dropping back down to these levels, maybe this level, and then eventually, maybe in a week or two, we'll be, going back up again. But potentially, I'm not saying that it has to go up. It could be a continuation, and we could break these lows. Who knows? I can't tell from, it's way too into the future for me to have any idea. But for the immediate days, I was very confident we're going to drop. So I'm only looking for sell positions, and I'm looking for any buyers who are potentially getting trapped, right? So I did jump the gun a little bit too early. I got a little bit too excited when I saw what you're about to see any moment. There was this beautiful amount, like you can even see in the depth of market. There it is. Boom. So the depth of market has already reacted. TradingView hasn't, but we just gapped from here all the way to here. So the moment I hit play, you're going to see the market just drop. There it is, right? We dropped. Where's my little pen tool thing? Here it is. We dropped all the way from up here down to here. And that doesn't look like a lot, but the footprint is deceivingly... It can deceive you, the footprint. Like, that doesn't look like a lot, but believe me, on candlesticks, that was a big jump, right? And that pretty much gave me all the indication I needed that we're going down. I know it's not going to go much higher. So I just went pretty much all in right there and then. The moment I saw that drop, I'm selling. I didn't even break my orders up into that many different orders. I'm seeing buyers trying to push the market up. Look how aggressively these numbers are going up on the buy side, but it's just not happening. Can you see the buyers are trying to push the market up in this area here? But they're not actually moving the market in the right direction. They're really struggling to get it up. Again, gave me even more indication we're going to drop. And then maybe about a few minutes later, the drop finally happens. Takes a little while. Here it comes. And then we just nicely drop down. I'll just keep forwarding it a bit. Nothing really to watch here. It's just waiting for the market to make its move. We're dropping. And then back down to what was kind of like, not the low, but an area right here. And at this point in time, we were getting close to the podcast starting. And I was thinking, I can't do the podcast and look at this trade. I'm going to have to choose. And we're already near the low. There's a good chance what would happen is that we might, just play around for a few minutes. And then by the time I get to the podcast and I have to close, it could be in a worse area. So I thought we're already at this low. I might as well take my profit here. But yeah, my take profit was down at that second black line. I still have it on the chart. No, that's not it. Yeah, this second black line here was my take profit. And when did it actually hit? It hit it 15 minutes into the podcast. So not too bad, but that was basically the trade. And then I think I get out around here. I'm looking at the orders. I'm just looking if there's anything terrible. I give it to the last minute before I have to pretty much get out and start this podcast. And I pretty much get out here somewhere. I don't know where it is. Do I get out here? I've only got a few seconds left. Yeah, here I get out. So yeah, at the low basically. And that was the trade. But I'm a little annoyed because naturally, I mean, all right.
Yeah, they could have been like a $5,000 day easily.
Yeah.
Yeah, I mean, and it did keep dropping, but naturally, I mean, I would have just my not stop loss. My take profit would have been hit, and that would have been it. So,
true.
yeah. So it looks like, oh, I could add so much, but I know I would never have held it through. At least this choppiness here, I would never have held it through that. Never in a million years would I've held it through that. I would have got out the moment it started looking a bit choppy. I would have got out and secured it.
Yeah.
So, yeah, hindsight can be a bit annoying.
Just to add on what Sam said, like for me, like I have like, let's say a rule, but it's 70% it happen. Like when we have like a red folder news in the pre-market, like most of the time, like we don't see pullbacks during the New York. So we see like the markets go straight to one direction without like aggressive pullbacks. So yeah.
Yeah, absolutely. And there were a few trade opportunities. I was thinking of jumping in just before this session started. There was a potential trade here. I didn't take it because I'll be breaking my ultimate rule. If you're already up and you're done and it's out of my hours, even if you see an opportunity, don't jump in. Just
yes.
Do you know what I mean? Don't
Yeah.
exactly. Don't overtrade. And the same goes. If it was a bad trade early on the open, that would be it. I'll walk away. There's no need to keep trading. Come back tomorrow because generally these hours aren't as good to trade in. But there was a potential trade here, and it did look really nice to set up. But again, it just wasn't. Again, it was buyers trying to. Let me see if I can pinpoint where it is. It would have been 4:30. Yeah. So what I saw, let me get the little pen tool out. Where is the pen? Oh my God, I've lost a pen. I don't know what happened. All right, I used to have a pen. Now I don't have a pen. So, okay, there's no pen anymore. Never mind. Obviously, we've had so many sellers coming in. A few sellers getting in very late into this trend, right? And then we had what I would say, seriously, what is actually happening? Fading ink. I don't want fading ink. I just want normal ink. All right. I don't know. Okay. Never mind. We'll just leave that. There is a pen tool in TradingView, right?
Yeah. Right.
Here we go. Brush. There we go. I don't know what I'm doing. But we start seeing heavier buying coming in. Now, to me, that was not new buyers coming in. I didn't see anything on the depth of market telling me these were new buyers. I think these were previous sellers from this massive move down, taking their profit, getting out, right? So all that heavy buying that looks like heavy buying is actually just profit taking, people exiting, sellers exiting the market. And rightly so. I mean, they're not going to hold it forever, right? They're going to take their money. Had a few sellers getting trapped then, trying to push the market down and getting trapped. We pushed up a bit and then eventually back into a gap of volume at that time, which has been filled now. There was a gap in volume here. The moment we got to the tips, we just saw heavy selling. And on the depth of market, I didn't record it. I didn't screenshot it or anything, but there was 900 sell limit orders on one level on the depth of market right up here, which is probably a number you rarely ever see. You rarely see numbers like that. So I don't know if it was spoofing, if it was a legit order, because it did disappear very quickly afterwards. So to me, I think it was someone spoofing the market, but still, no one wants to buy into 900 orders sitting right there. No one wants to buy into that. That's just insanity, right?
Right.
So the market very quickly rejected it and just pushed down onto the next area of interest, which is down here. So yeah, that would have been a good trade as well. But again, out of my hours, out of my rules, I'm not going to break them. Ready up for the day.
And that's how you trade.
Yeah, no need to overtrade and potentially lose everything you made earlier because you couldn't hold back. But that was it for my day.
And Sam, what is your experience with using footprints on TradingView? Is it not lagging? It's not lagging like the footprint or delayed?
It's actually not bad. I mean, it's not as good as certain platforms. Like Sierra Charts is a lot better, but I don't know if you've ever used Sierra Charts. It's the most complicated platform you'll ever try and use in your life. Really good at, speed-wise, amazing, right? But I'd rather sacrifice that little bit of lag, and I'm talking lag that really doesn't matter too much. Like you can still, you're probably under a second. I'm talking like half a second at most. If it's volatile, you'll get a bit of a lag. But I'd rather sacrifice that for the ease of use and the, I don't know, it's very intuitive TradingView. It's just nice to use,
Yeah. I think everyone, and it's almost like custom. Everyone uses it. All three of us use it, and everyone else as well. It seems like.
I think every trader uses TradingView to a certain degree. Yeah. Do you know what I mean? Yeah. Maybe not for
if I don't see you using TradingView, I'm going to kind of think you don't know what you're doing, just a little.
Absolutely, it's a great platform, and yeah. But Michael, you do have a question. Andre asked
about opportunities on GU.
Yes, that's correct.
Cool. So I'll go through all of them, right? I see Andre got a question on GU about any buying opportunities. I see Robert has a question about Bitcoin. Cool. So we'll do those two first, right? Typically, I would go with the other way around with there were no opportunities first and then get into the good ones. But seeing that I didn't have any, I was flat today. I'll just start with GU, and then we can get into Bitcoin, right?
Nice.
So for me, you guys know I trade this market maker structure cycle, right? And Sam, I'm going to show you something that's super cool. I know you said I should get this pattern printed on a shirt. I'm going to show you the beautiful, pristine pattern here on gold in a bit. After we do Bitcoin, I'll show it, right? But in essence, guys, I'm looking for a pattern that looks like this. I draw this pattern 15, 20 times a day, right? Right. So this is my structure here. And this is my, what I would call peak, right? I'm staying away from this peak here. I do not trade the peak. I do not trade the peak. I do not trade the peak. This has stopped me out so many times. It's ridiculous. A lot of my battle wounds have come from trying to trade this peak here, right? Yeah. So I learned to leave that peak alone, and I'm more of a make the money in the middle guy, right? So I got my peak high over there, and this is what I would call my peak low, right? From both of these, I am only interested in two particular areas, which is one right here, right? This is my level 1, and then obviously this would be my level 2. I'm only trading these two things every day when I'm looking at charts. I'm only interested if I'm in level 1 or level 2. That's it. If I'm not in level 1 or level 2, I'm not interested in this pair at all for that day. It's just a pass for me altogether, right? So just looking at this structure here, right? The first thing I would ask, and we're going over GU right now, obviously, so just want to kind of bring this up. If you look at the pattern that I drew, and then you look at this over here, this is pretty much the same thing, right? So I can tell automatically that I'm in, this is the peak. It's kind of topped out here. This is as high as it goes, right? So when I come into the market, there's a few questions I'm always asking myself. One is, where am I in the cycle, right? 2 would be I'm looking for some type of pattern. 3 would be I'm looking for higher time frame confirmation, right? And then 4 is I need an entry signal, right? So every day, like clockwork, this is the only question I'm asking myself. So when I come in here, I can automatically tell this was on the 19th, right? So coming in here, I already see we're coming off this peak high. And what really clues me into that is when I see this 1350 cross, right? The 1350 cross is the 13 EMA, which is the red one, and then the 50 EMA, which is the blue one, right? So I will mark that up as well. So I can see that pretty much clear as day. 1350 cross, right? So when I see that, I automatically know I'm in level 1, right? I'm only interested in this move going short here, right? So in essence, once I can see where I am in this, I am in the cycle, I can tell I'm at level 1. Once the 5200 cross, like here, right? The 5200 cross would be the blue one, which is again the 50, and the white one is the 200. That's how I can tell that I am in level 2 at this point. Right? So once I got the 5200 cross, I'm in level 2. And once again, these are the only 2 levels that I'm trading. So for me, it's pretty easy and simple to see, right? So this is the pattern I'm trading, right? This is the pattern I'm looking at. Peak, level 1 short, level 2 short, and then this will eventually continue to come down and make some pattern like this, right? And then I'm long at that point, right? So to answer your question, I would not be I'm not looking for any buying opportunities on GU. I'm short. GU is short. In fact, GU is level 2 short, right? I have my 5200 cross. Oops. Oh, I have this 5200 cross. That's how I can tell that I'm in level 2 going short, right? So I wouldn't be trying to buy GU at all. Like there are absolutely 0 opportunities to be trying that. The only way that I would be interested in buying GU is once this comes, let me move this over. Once price comes down here, right? And it kind of makes this pattern here, right? Then I will be interested in that move right there.
Yeah.
Right here, which would be what? This would be level 1 long at that point. So I'm not interested in this at all until this turns around, right? This would be that peak again that I'm mentioning over here. So yeah, I would not recommend trying to buy GU at all at this point. This will probably just continue to keep dropping. Not to mention on my TDI, you see we have this market baseline, which is the yellow one. It's starting to point down. This will eventually just keep coming down like this until it makes, again, this bottom to start turning back around for level 1. Right. So I will stay away from GU loans all the way until we get some type of structure looking like this, that we put in a peak low. And then I wouldn't even take this trade here going long, right? I'll wait for it to break this area, come back and retest the same zone. Then I'll be interested in longs. Right?
Yeah.
Does that kind of clarify things, Andrew?
Yeah.
Who said that?
Andre, yeah.
Yeah, Andrew.
Yeah, to add on like what Michael said, if I can share my screen.
Yes, please.
Okay, so I have, let's say this is the weekly time frame on GBP. So we are sitting like, let's say, in seller's territory. So you can see this week here took this previous week and went down. Plus this, if we measure this candle, I think this is the biggest candle we got compared to this few candle right here. So I'm expecting at least a retracement to
Aymane, can I say I love the colors of your charts? Honestly, I might
Yeah.
I might make it blue and black like this. I don't know. This looks really clean and nice. I might copy you on this one.
Yeah.
Carry on.
Like I stay away from the red because psychologically, like it's
yeah. Walter does this as well. Another trading coach of ours, Walter. He does a similar thing.
Yeah. So as I said, like I expect like we have a retracement to the 1.2775 at, yeah, and this like correlated with the DXY. If we see the dollar, like we are in this area right here, which is really interesting, because if we will break this zone right here, I don't know where we will go, but I'm expecting, I could be wrong, like to stay in this zone and creating a small range before deciding where to go. And just to add on the NQ, like on bigger time frame. So in bigger time frame, it's not that clear, but like historically, we have a lot of V-shape, like V-shape, like how to say it, like V-shape reversal. Sorry, we have like historically a lot of V-shape reversal, but if it will happen this time, we don't know. Like as a trader, like you should react, not predict. So in terms of levels, like on the NQ, I had this. Sorry, it's a little bit messy. So I had this zone marked right here. Like this is like, let's say, a seller territory. So we took this previous week. Something happened here. We push, we came retest, and we push down. And when we came back to retest this sellers area, we had, if we go to lower time frame, let me clean up a little bit. It's right here. So the setup I had on NQ today, but I didn't take it. Like for me, like it's always there is fights between sellers and buyers. So first you have to spot like there is a fight. So when there is a fight, for me, like as a trader, I want to be second. I don't need to be first. So maybe Michael, like his idea to be second is like on the structure, based on the structure, you want to wait for this second phase, if I say it correctly. But for me, like it's just I analyze the wick. So let's say this 1 hour candle here, for me, like this is like seller pressure here. And if I check the footprint, you will see big orders here. So for me, there is like two scenarios. Or the sell limits were placed here or above this wick. And in this example, the sell limit were placed above it. We broke. So we broke this, like let's say here, there was fight between those buyers here and those sellers here. But we broke. So here I saw that sellers are more in control. So I go to 15 minutes, and on the 15 minutes I had another fight. So fight again between those sellers here and those buyers here. But at the open, I saw on the footprint that the sellers are more in control. So I had this candle right here at the open. It's similar like what I explained in the beginning. Like we took the previous week and we closed down. So if I check the footprint, what happened here and why I didn't answer sell here, let me share the footprint. Yeah, so 230. So this is like the candle I was talking about. Like you can see in the bottom of the candle, like there is big cluster, there is big order here. So So when this 5 minutes open, I was watching the 5 minutes to see like continuation to take steps. But when the 5 minutes open, there was big momentum to go higher.
Yeah.
So I normally, if I had to take this trade, I will take it right here, because after the close we saw big orders in the top of the candle, and I had like very idea that the market will go lower, so I will go enter somewhere here. So yeah, so this
Yeah,
is what
very interesting.
I could, yeah.
Awesome. Yeah, this is it. I mean,
Nice.
yeah, you're looking at the footprint really well. Yeah, I love it. I love it. That's awesome. And so you mostly trade the NASDAQ, correct?
Yeah, I trade mostly in NASDAQ. Yeah.
Very nice, very nice. Yeah, I mean, S&P 500, NASDAQ, they're like almost
Nice.
identical. So
Yeah.
it's pretty cool. It's very cool. Let's see if
And
there's anything else. Yeah.
In terms of risk, Coach Sam and Michael, like how do you like calculate your risk per day? Do you have like, let's say, do you have a fixed risk per position, or let's say dynamic? And if maybe traders who are watching, maybe do you suggest them to use like a fixed risk or dynamic risk? It depends of if it's A+ setup or it's not. What is
Do
your
you want to go
criteria?
first, Michael?
You hit it right on the head. That's exactly what I do. Yeah, I'll jump in first. That's exactly what I do. Right, you hit it right on the head. So for me, I don't think it's smart to, and it's not just me thinking this, but like big guys trading 7-8 figures, they don't put the same amount of risk, on each trade. It's based on the setup, right? A+ or A, B, or C setup. So I pretty much follow this. Oh, am I sharing my screen?
Yeah, you can share it.
I don't know why that just happened. Okay. So for me, I set mine up a certain way, which is pretty much what you just mentioned. So I have 5 setups. 5 setups in my playbook, right? One is my master trade. This is my highest probability setup. 2 is my combo trade. It's really 2 trades in one. 3 would be my ID 50 trade. This is the only trade I have that I take off the 15-minute chart. 4 would be my M or W off the 200 EMA, right? And then 5 is what I call my money trade. Now, each one of these have their own characteristics, their own checklist, own setup, on the whole 9, right? The first 2 is my A+ setup, right? And on my, I'll do it this way. So this is an A+ setup as well. This is a B setup. This is a B setup. And then this is a C setup, right? Now on my A+ setups, for me, I have to put on my full 1% position. I say it's illegal. If I have an A+ setup and I don't put my full position on, I broke my trading plan. Like I have a full position on it, no matter what. On my B setups, this would be anywhere from 0.5% to 0.5% to 0.75%, right? Depending on kind of how I'm feeling about it. If it meets all the criteria, knife shift candle, what I call a Mona Lisa, like it's absolutely beautiful, then I'll pretty much go higher on it, maybe 0.75. But if it's a regular setup, maybe it's missing 1 or 2 things, or the shift candle isn't beautiful, I'll just put a half a position on it, that 0.5% to 0.75%. And then my C setup is just what it sounds like, my C setup. I have to take it because it's still a good setup, but I'm not going to put my full risk on that, nor or a quarter. I would just start out with 0.25% all the way up to 0.5%. So depending on what is happening, like on my setup, I base it all off these. My A+ setups, I'm definitely putting my full percent on it. B, a little bit of wiggle room there, maybe a half to 75, right? And then my C setup, the max I can go is a 0.5% on those.
Yeah. Very nice. Yeah, I mean, risk management, obviously, very, very important.
Yes. This is a whole level, of extra risk management in essence. Because what I found is, and again, as I mentioned earlier, is most of them don't just put a fixed percentage on like a certain trade, right? Like you can't treat them equally. I like to use the correlation of that's like letting the starters on the basketball team get the same amount of playing time as the bench players. Like that doesn't make sense. The better players deserve more playing time.
A very good analogy, that is. Yeah. No, absolutely. Absolutely. You're right. I mean, with me, like, I think it's because like the speed I have to enter, like, but if I spot the opportunity, if I don't act within like 5-10 seconds, a lot of the time, like, I wouldn't say it's too late, but you've missed the right entry. Does that make sense? Like you have to react so quick. A lot of the time it will be hard for me to calculate the exact risk to reward ratio and all that, right?
Gotcha.
Because it is ultimately like scalping what I do. So with me, it's like I always set a stop loss, right? A stop loss is guaranteed, has to be set, but it's at the absolute worst case scenario. I put the stop loss, right, where I have to get out. If it hits my stop loss, I'm 1,000,000% wrong, essentially, right?
Right.
And I never allow my stop to get hit. This is the thing, though. Okay, it's only there, literally, to imagine my internet cuts out and I can't manage to trade, and the market is moving and I can't log in. Like I'm panicking. That's what my stop loss is for. Like to get me out at my full risk, basically, that at my full risk tolerance, and that's it, right? So literally never my stop loss ever gets hit. And that doesn't mean I don't lose trades. I lose trades like everyone else. But I get out the trade. I can already see, using the order flow, using the footprint chart, if I was right or wrong. And it's normally I can tell if I'm right or wrong within the first 5 minutes. If it hasn't already shown me a bit more confluence already, like in terms with the transactions coming through, if I'm in a buy trade and I'm just not seeing more buyers coming in, or they're getting absorbed and the market's not going, it's just not pushing up, I will know this is not going to work out. So I'd rather get out then, and then usually I get out at either a tiny win, a small loss, or break even, pretty much tiny amounts, right? Where I just call it a failed trade. Even if I made money, still a failed trade, because it didn't actually do anything. I just got lucky that I didn't get out and I lost, right?
Right.
And then with my take profit, again, I'm dynamic in that respect, right? So if I'm in a buy trade and I just see a lot of other buyers exiting, right, getting out at a previous high or something like that, and then I'm going to follow suit as well. I'm going to get out too. So there is no fixed risk reward in the way I trade. It's very much, if I see something, I just react to what in that moment, what the market's showing me. And it's been working pretty well for me, thankfully. But
I use the same thing. Just sometimes when I see and I am in the moment, let's say in the zone, and I see a lot of things happening, so maybe I can add few more contracts, one more or two more contracts. But otherwise, yeah. So, but let's say for someone who just started, it's better to have fixed contract or fixed risk. So he should, let's say, know his strategy, know his edge, and then do like Michael said, for example, A+ setup, B setup, C, etc. So, yeah.
Oh, absolutely.
Right.
And another layer to it is I split my order up into quarters, right? So a lot of the times where a trade doesn't work out, I may only have got out with 1 or 2 positions. right? So 25 or 50% of my overall, what I'm willing to put in the market, right? So that kind of helps that when the trade is good, I usually got my full amount on there. Because normally, other than today, like today was a bit of a different one where I kind of just put everything on pretty much at the same time, just because I had loads of different confidence and I was pretty confident we're going down hard today. I saw that institutional jump where, you know, I just saw the sellers like whoop, gap the market. I knew that it's gonna. I was very confident, right? Obviously, I could still be wrong, but I was willing to make that risk in that moment. But normally, I would get in with like quarter of a position, analyze. If I see more like people in my favor coming in, more contracts coming in, and it's working, I'll add another one, and then add another one, and add another one, and then ride the wave. So that's normally how I do it. Then add multiple positions. Gotcha. Which kind of helps again, just keep the risk a bit lower as well, because you're not then got your full risk right at the beginning. Because at the beginning of the trade, especially as a scalper, you might have a bit of a edge, or you might have a bit more probability will go in your favor, but the probability gets stronger as the trade progresses. Do you know what I mean?
Right, right.
So, yeah.
Yeah, for me, like it depends on like how it goes. Sometimes, like maybe I might want a price and like say like, hey, the candle closed pretty low on this one, so I'll enter maybe like a piece of my position, and then I'll want it to pull back to the certain area, and then I'll hit the rest of it on.
I remember you showing.
And then that second position is always recalculated to make sure that it is actually the other piece of the position, right? So if I got, let's say, a 20 pip stop loss and I'm putting on a quarter, let's say I put on a half of my position, right? And then I'm in that. And then the second position comes on and let's say it pulls back and now only have a 10 pip stop loss. I'm going to recalculate that second position. I don't just put the same position size I just put on the first one, because technically if I did that, my full risk wouldn't be on. It would be close, but it wouldn't be quite there.
Yeah. That makes perfect sense. So there's like many ways you can handle risk management. I mean, there's there's so many different elements to it. It's not just the stop loss. Do you know what I mean? A lot of times
for sure
there are other ways. But yeah, I mean, it's ultimately
there is a lot of things. Like there's the win rate. For me, like when I just start trading and I saw this, like let's say this tool risk reward, and I was like, oh, 1 risk to 20 reward. But for me, it didn't work. For me, like you should lose 10 trade to win 1. But how will be your psychology like when you are losing 10 trade?
Yeah.
So yeah.
I think for scalpers, because you would consider yourself a scalper then as well, wouldn't you, Aymane? So win rate does matter, I think, for scalpers as well, because like I said, there's so many, like sometimes I'll have so many of these like failed trades, right? Where you get out at break even or just like a little bit of negative or a little bit in profit. And I kind of just ignore those trades, right? Because it's almost like it's almost like the trade it was a failed trade, right? It wasn't a major loss, wasn't a win, wasn't really break even. They kind of average out. But yeah, I mean, like I said, stop loss never really gets hit unless something tragic happens. I mean, of course, my stop has been hit before, but like it's so rare. But then again, even my take profit is very rarely hit. I usually get out. It's true. I get out before my take profit actually gets hit a lot of times. Annoyingly, today would have been one of those days where I probably would have hit my take profit. Do you know what I mean? And I had no.
They knew you had the podcast. That's what it is. Yeah. They got a weird way of knowing what you got going on.
There's always something, you know. It's just the market doesn't want, the universe doesn't want me to have my take profit hit. That's what it is.
Like, yo, please
it's against me.
Yeah, and like obviously, like currently you see like there is, let's say, market conditions are changing. So like how you approach that, like how you deal with those changes. Because let's say for me, I just how I see that there is something is changing is just the volatility, because I check the ATR, because I'm trading on the 1 minute or the 30 seconds sometimes on the like 30 seconds for my entry. So if I see, let's say, on 30-second candle there is 30 points, and we saw that like few weeks ago, we saw the really high volatility. So do you have like anything you add to when you see this type of changes?
So I show you how I do it. I'll put my screen up really quick. Let's get trading view up. All right, cool. So it all comes down to the volume profile for me. The volume profile tells me pretty much everything I need to know. Not everything I need to know, but like a large chunk of it, right? So like, all right, let me zoom out a bit. Let me not zoom out. Let me go on a higher time frame, right? So for example, that whole push down on the S&P 500 that started back in February, like mid-February, right? This whole push down. If I do a volume profile from the top to the bottom of it, right, and grab the volume from that push down, I can see now where there's the low volume, where the gaps in volume are. That's what this big area is. That's why I had such a strong bearish sentiment when we got to this area, right? Because it's, I wouldn't say mathematically, but it's like the likelihood of it just going right through it is very unlikely. Like it will have to push down a bit. So that's like how I would know, okay, we're probably going to have a reversal. But then say, imagine this zone just didn't exist, right? Imagine we got to like a heavy traded area like this, the point of control. Like almost 99% sure that when we get there, the market's going to start ranging for a bit, right? Just because heavy volume just essentially means that's where a lot of buyers and sellers want to transact. That's where they want to make their trades, a lot of trading volume. And if a lot of buyers and sellers are both trading, the market moves sideways. It's just a very vicious battle between buyers and sellers. The market only moves when there's like a serious imbalance, really, right? So like, say we get to that area, I now know I'm not expecting massive trends right now. My expectation is going to be lower. I'm going to be targeting more like the bottom of the range or the top of the range. I'm looking at the market now. The moment we get into that area, I'm looking at it as a ranging market, right? If we're out of those areas and we're moving, then I'm looking at more likely of a trending market, right? So I use the volume profile to kind of preemptively figure out where the probability is of ranges, reversals, things like that are going to take place. And then I base my decisions purely on that. But like and that's just the long term, like this is the long term, right? But it happens like every day. Like even if you drop down to a lower time frame, it's the same thing, just on a smaller scale, right? So like here, right? 3 days ago, the heaviest trading volume was this area here, the point of control. When we got there today, the market stopped and just went up and down, ranged for a bit, right? Only ranged for, what is this, 15 minutes, so like an hour and a half. But nevertheless, there was still a ranging market. So I'm not going to be jumping in this area expecting the market just to shoot off any second, right? Like I know there's going to be choppiness in this area. So probably not a good idea to jump in this area because you know there's going to be choppiness. And if you are in that area and you are in a trade, treat it like a range, right? The moment we get here, if the market's moved a little bit in your favor and it's near the bottom of the range, get out. You know, like just get out the market because there's a good chance it's just going to go to the top again and then back down. And so knowing like where all the volume is kind of lets me preemptively know where how I'm going to treat the market, right? And
lower your expectations or higher.
Yeah, exactly. So I'm going to have more of a tighter stop loss. I'm going to have a tighter, take profit as well. I'm not going to expect long, like, if you bought here because it's near an area of support or whatever, right? And you bought here, you could still technically have made money, right? Because there was still a bit of a move up, right? It went from down here. Say you bought at this support level, you could have made quite a few points. It would have actually been a decent scalp. But if you're targeting like these highs, it's never going to happen, right? But if you instead targeting like exactly the bottom low, where more like a ranging market, where the volume drops off again, you could have actually had like a really clean trade. So you can either make money in, I'm not saying you should counter trend trade, but should you have done it by understanding like the expectations of what could potentially be possible and lowering them because of the area we're in, you could have actually had a very clean trade. Even it's such a bearish day, you could still actually have made money in a bull trade. So yeah, the volume profile for me is probably one of the most, like, without the volume profile, genuinely I would be terrible. Like I know there's other ways of trading, of course, like, you know, so many people trade without using the volume profile, but like for me, I would feel blind almost, because most of my decisions are based on it. Do you know what I mean?
I feel you. I think mine is kind of similar, just maybe a different facet. Like for me, the template that I have, right? Like this is, I mean, my template is nearly everything. If I didn't have this custom template on here, I can still see the same stuff, but I wouldn't be able to see nowhere near as much information as I can actually see, right? Like, let me take all of this stuff off. It's just a lot of good information on here for me. Like, I like my chart at the top. I like my TDI at the bottom. It gives me a lot of information. I need them to agree with each other. Even over here, right? Like if you look at all of this information over here, I got my high today, low today, today's daily range, yesterday's daily range, weekly average daily range, the weekly high, weekly low. These are target areas that I'm looking for, right? Whether I'm using it as a take profit area or a stop loss area. This here, right? Like this blue dash line, this is like yesterday's high or low. This orange one here, average daily range, today's ADR. So it's a lot of information on here that I'm really using to kind of determine, hey, this is a good area for the bounce off of, or hey, this is a good stop loss area or take profit area. Because just hypothetically speaking, if I were to take a trade here, right? Like say I took it here, right? And then I put my stop loss above here. This is a nice piece of information. Like stop loss is above all three of these EMAs. The stop loss is above this ADR. The stop loss is above the yesterday's high. Like this is a decent amount of information, right? For me to say, hey, if they come back and stop me out from all the way down here, all the way up there, they did a lot of work and they deserve to have that. Like they can have my order if they can do all of that work, you know, before I get out of it.
Right, Michael, so, like what is like the average like of your trades when you are entering a position? Like is it intraday, like 2 hours, 3 hours?
Great question. So typically I'm taking trades. I'm only in it for maybe an hour and a half to 2 hours max. If I'm in a trade and 2 hours has gone by already, I'm going to close my position, or if I'm down, I'm closing the position no matter what. Like I'm just going to close it, because kind of how you mentioned, Sam, when you said you can kind of tell like, hey, things might have changed here, right? Like I don't want to be in the market anymore. If I get in a position and it's still sitting here 2 hours later in the same spot, I just want to get out of it with a small loss or a small gain. Now, if I'm up on a position big and I'm already at break even, if my stop loss is already at break even, like say, for example, I'll pull up gold because I took this on Monday. When I took this position, right, if I'm up, because I held this all the way until the end of the day. So I took this position here, right? And this is at 10 o'clock, right? So I'm holding it from 10, 11, 12, 1, 2. I'll literally move my stop. Actually, I'll put it on 15 minutes so you can actually see a little bit better. I will trail my position the entire way, guys. Like first, my stop loss is above here, right? Then it gets here. Once this drops down, I'm pushing it here. Once that happens, I'm dropping a little bit further. And I'll continue to do this, right? Like even when this red candle nearly, because my target was really at this 800 EMA, right? Once this pulled down all the way here, I'm moving my stop loss above the last swing point. And I will do this all the way until 3:55 p.m. Eastern Standard Time. Right at 3:55 p.m., I have an alarm on my phone. Close this trade. Because I don't want to, I'm not a swing trader, so I'm not holding my position till Asia to the next day or the next session. But two, I like to close it an hour early because from what I've witnessed, a lot of times, sometimes in this last hour, it'll end up coming back pretty hard, taking me out with a lot less profit than I would have had. So I like to just avoid that last hour anyway. So I close it at about 3:55 p.m. Eastern Standard Time, no matter what. I could be up 4 or 5 hours for the day. I'm still going to close it. I'm not holding it any longer. I'm done. So to answer your question, I'm either closing it within this 2-hour time frame because it's not doing what I wanted to do, or I'm up far enough in my position that I'm trailing my stop, but I'm still closing it at 3:55 every day, no matter what.
Yeah, makes sense. Makes sense.
And like you trade gold, GBP, USD, and like all pair, or do you have like watch list you go?
Yep, I actually trade a lot. I'll trade NASDAQ 100, US 30, S&P, gold, silver, crude oil, Bitcoin. I don't trade the peso. I actually live here in Mexico, so I just look at this for like conversion purposes. But other than that, I'm trading.
Well, technically, you do trade the peso if you think about it.
Yeah, you're right.
You're using dollars and then buying stuff.
Right.
Sorry, Michael, to ask you again. Like, if you could, like, you could tell us, like, just like how your routine look like. So when you wake up, you analyze all the pairs, and do you see like what you will focus on?
Yep. So every day, every single day, I jump on here at about 8 a.m. Eastern Standard Time, and it takes me maybe 15 minutes to go through all of these pairs. But right away, as I mentioned earlier, I can see where I am in a cycle based off these, the 1350 cross, so I know I'm in level 1, or the 5200 cross, I know I'm in level 2, right? So every single day, I'm looking to figure out where I am. Either this happens and I'm in L2, or this happens, right, and I'm in L1. I can easily identify, for the most part, where am I in this entire cycle. So if I'm in level 1 or level 2, I'll put this on my watch list for today, right? And then once I go through all the pairs pretty quickly, right? So I'll do this. This is a real live example of what it looks like. It's so funny, right? So I'll come through here. I can easily tell here I'm in level 2 long. How do I see that? 5200 cross to the upside. I'm looking for W's off this 200. That'll take a second to happen. On to the next one, right? Same thing here. I can easily see I'm in level 2 long. I'm looking for this to come down here. I'm looking for W's off the 200. That's not happening. I keep going, right? Same thing here. I can easily see that 5200 cross. I'm looking for W's off the 200. That's not happening right now. So I'll go through this entire thing, all of them, right?
Yeah.
Every single one of them until I get to the end. I might have about 2-3 pairs on my watch list for the day, and then I'm honed in on those two. I like set some alerts for certain price levels. And yeah, really just monitor those two until about, let's say 10, 11, right? For the most part, for me, indices, I can't spell today. I'm looking at until 2 p.m., right? But any Forex pairs, I'm looking at those until 12 p.m. I don't trade currencies pairs after 12. For me, the volume kind of dries up. The moves typically already happen, and I'm just not interested. That's like my trading hours, basically. It's from 8 a.m. Eastern Standard Time to 12 p.m. Eastern Standard Time for Forex. And same thing for indices and commodities, so like gold, silver, Bitcoin, except I'll trade those till 2. If something sets up after 2 o'clock, I'm not interested in it.
Yeah, no, absolutely. You got to have your set times, right? Probably one of the biggest mistakes I think any trader can make is just start trading at any random time, middle of the night, wherever it might be.
Yep.
That's a recipe for disaster, man.
And we've all been there to even learn that lesson, right? Like, man, why do I always seem to when I take trades at 6 o'clock, like I always get stopped out or something happened or it's real slow. Like, you're trading Asia. You're trading S&P in Asia. Like, that doesn't work. Right?
No, exactly.
Or even for me, right? Just a little bit more context. Like for me, I won't trade Asia pairs except if it's a beautiful setup and it's what I would call a double Asia pair, right? So something maybe like AUD NZD, right? These are 2 Asia pairs. Majority of these moves will happen in Asia, right? Not quite often that I do take these, but if I was, let's say, going through my checklist and I saw something super close, like maybe my master trade, which is my highest probability setup, if I've seen that kind of setting up, I'll set an alert for it and say, take a look at this again in Asia just to see. And then if it does set up, I will take it, but I won't take it with my full position. I will only take it with a quarter or a half, because obviously Asia is the least traded session. Only about 10% of those transactions happen in Asia. So I'm not too interested in putting my full position on. So I just stick to a quarter or a half.
Yeah, exactly.
So timing is really important. Timing, volume is really important, and especially like if you are intraday trader or specialist scalper, you don't want to stuck in a range and like, because like for me, how I see range, it's where the big money are accumulating like liquidity. So if you stuck there, like, and I have been there, like I was trading like the pre-New York, and I was like getting stopped out, and then the New York open and I got the move. So yeah, let's say there is trader who are watching us now, just if you are break even or you are losing a little bit, just fix one time, focus on one time, and you will see like this big change.
Yeah. I mean, like what you can do. I mean, it's probably, if I share my screen.
I'm going to show something really quick too, right? I think I showed this with Paul on one of our sessions.
Okay, no issues. Do you want to go first, Michael?
Oh yeah, I'll just show it really quick. This is one of my like, obviously I have 5 setups, and I don't go through this nowadays because I already pretty much know what I'm looking at. But I give this to like my new students and like just kind of show them like, hey, if you're trying to trade this setup, this is what you want to be looking for, right? This is my ID50 trade 15-minute chart, right? Seems like it's a lot going on here, but it's more or less just keeping me in check in essence, right? Very first thing, checking the news, right? I got to check the news to make sure I'm not trying to jump in before, any high impact news. And then from there, trade within your time frame. We just went over this, right? Right. Checking the high of the week, the low of the week. Make sure I zoom out, right? MW structured off the 200. So this is basically like my guideline in essence to take this particular setup. Only this one though, right? There's 4 other checklists just like this. They're obviously for the other pairs. And then I got some what I would call pro tips here at the bottom, right? Show up every day. Don't get EA'd, right? There was clearly a time where I didn't wake up and a beautiful pattern happened on EA, on Euro AUD, and I missed it. And I was pissed off about it. And I'm like, all right, I got to add it to my repertoire, right? There's another time where I learned that, let's say I stopped looking at charts after at 12, and then I realized, man, some of the indices still be running, till about 1, 2 o'clock sometimes. So I needed to add that to my repertoire. Like, okay, if it's 12 o'clock, don't look at any Forex pairs, but I can still look at the indices, right? Same thing here. If they don't move and you can't get in, it's a pass. Just look for the next trade. Clearly on this GBP AUD trade, I got in like I missed the move, but I chased it, right? And I end up losing on it. So I'm like, look, don't chase these trades. If they pass, if you know, just it's a pass. Just look for the next one, right? If they move and you get stopped out, don't re-enter the trade. That happened obviously on USD CHF. They moved a little bit. It came back, stopped me out. I was pissed off. I jumped back in the trade and I lost again, right? So it's these things where it's like you just kind of want to, you know, stick to it, and you know, really just create that checklist and that overall thing. I don't go through all of these, but a lot of them are what I would call hard rules, which are pretty much the ones in red, right? I don't really check for like divergence. I don't really like look at what else is on here that I don't really look at. The fibs, right? I don't really look at the fibs. I just use that for like extra confirmation sometimes. So I don't go through these every last one of them, but this is a great checklist to kind of, you know, start you out with.
Yeah. I got to ask, did you print it out and actually sign it as well?
Yep.
So signature.
Yeah. So funny enough, right? Funny enough, if all of this happens, right, this is what I used to do. If the trade confirms, take the trade without fear. What would Axe do? When I say Axe, I'm referring to Bobby Axelrod from the TV show Billions.
Okay.
And I noticed that he would say on there, he was like, "What are you doing?" He said, "I didn't sign off on that trade." And I'm like, he has to sign off on trades? That's crazy. I'm like, I'm gonna do that, right? I have to sign off on my trade and hold myself responsible for this.
That's awesome, man. That's awesome.
So yeah, this is
that's
this
really
kind of
awesome.
touching on that topic. And I got 4 more like that, right? Like super to the point, very structured, and again, just keeping yourself, you know, to it. I used to have them on my desk, like stapler and everything. Like, oh, this is a ID50. Let me look through my ID50 setup. All right, put that on the desk. I go through the whole thing, check it off, right? And luckily for me, like I'm a day trader, so like I'm trading on an hourly candle for the most part. So I got plenty of time to like not just make decisions, but really go through the checklist thoroughly. And that was more or less when I first started too. Yeah. Right. Like nowadays I can go through that list pretty quickly. It takes me rapid fire quickness to really go through all of those.
It's like a pilot before they have to take off. They got the whole checklist. But look, I mean, I can understand why that works, right? Because you're forcing discipline. Do you know what I mean? Within yourself. So absolutely.
And when I say I took a trade and I'm like, no, this met all my criteria. Oh, I really mean it. This met all my criteria to take this trade.
You've got to be honest with yourself, right?
It's important to respect your plan because you are competing with really smart people. So if you don't respect even your trading plan, so
100%.
Absolutely, exactly. So I'm just going to pull up my screen real quick. All right. So talking about like the time of day, like if you don't, this is for the viewers, if there's an instrument you want to trade but you don't know what time should I trade it, you can always use just, you know, the bare basic volume that comes in every platform. That's usually by default at the bottom. Like this is the S&P 500, so it's pretty obvious that this one is really only going to be during US Open, right, when the stock market's open. So you can see where the volume is every single day, right? At the same time, there's never any randomly volume pre-market because why would there be, right? But if I go to like, I don't know, like a currency, right? Like the British pound. And you might not see it so much in the 15-minute, but if I drop to like, let's say the 4-hour, you can, because it's obviously a currency, it's not directly like the US stock market. So you're going to have, it's a bit more difficult, but you can clearly see where the main hours still are, or the main 4 hours of trading is every single day, right? So they're, you know, they're like, it's the same 4 hours every single day is probably going to be the highest opportunity, you know, to have a decent trade, right? So what are those hours? That is, so if I just mark it out, so UK, well, it depends where you are in the world, obviously, but if I do drop down to the 1 hour, so I can give you the exact range. You're talking, you know, like anywhere from UK time. So, all right, I'll just say the UK time, and then anyone can convert it. But you can see it on the screen from like 12. So basically midday UK time, all the way up to probably about 4 p.m. So I'll say anywhere from like 1 to 4 p.m. around that kind of time frame is where you're going to get the most activity on that pair. And that works with all currencies. Doesn't matter what you're trading. Just look at the volume. Where is it actually busy? And then you can figure out, what times of days you should be trading, and if you really should be taking a position right now, yes or no. But the important thing is, right? Like, only because there's heavy volume doesn't necessarily mean the market's going to move, right? You will see sometimes the market can move quite a bit, even during low volume, right? But a market moving during low volume behaves completely different to a market moving during heavy volume. So whatever strategy you have, however you interpret the market, if it works well during like heavier volume times, there's a good chance it's just not going to work very well during low volume. All right. Because it's like, it's hard to explain. Like, something else is pushing that market. It's not volume anymore pushing the market up or down, right? It's just kind of drifting. When there's low volume and the market just goes somewhere, it's just drifting. I don't necessarily know why it does that. Sometimes it just does, but it's not down to a lot of aggression or a lot of people coming in and a lot of trading going on. It's literally just drifting. So your strategy might not work during low volume times, if it does work during high volume times, or vice versa. If you've got a strategy that works really well during low volume times, might be a range type bound strategy. I don't know, maybe using oscillators and whatnot. It's not going to work as well during heavy volume times. Do you see what I mean?
Right.
So yeah, like go on. Sorry.
Just to add on what you said, like when I was trading Forex, like I was like going back, I made like spreadsheet and going back in time like 40 days, and I was measuring the candles, let's say 4-hour candles, and I note down like when we get these big candles. So you can do the same exercise, like, and take a spreadsheet, go back in time 40 days, and then you will measure like the big candles, and you will see like at the end there is, let's say at 6 or at 2, like 50% of the time we have big candles. So you will start focusing on just on this specific time.
Yeah,
so
exactly that. So yeah, I mean, like, there's a lot of ways, but you got to use like logic. Whatever you're training, you have to use a bit of, I guess you can call it logic, but a bit of if it doesn't make sense, like why. Like, for example, if you're using oscillators like the RSI or stochastics, right? We all know they only work in a ranging market. They're not going to work in a trending market. So if you're seeing it's a trending market, like, logically, you would never use it, right? But I see so many people have, like, they'll see it work in a ranging market, and then they think it's gospel, and they'll try and use it any hour of the day at any market conditions. And it's like, no, you're using the tool wrong. Do you know what I mean?
Right.
Like
you said, you have to use logic. The logic should, but at least you should feel it, just you by yourself. You should have a logic, like a base to your strategy. So for example, if we are talking about the footprint, and like when I say like there is big cluster in the top of the candle, so it means something. So there is always a logic behind it. So even you trust the strategy. But if you just like put those concepts away just like this, so of course even you will not trust to execute based on it.
Yeah, exactly that. But I mean, like, look, you can make money in the Forex market or trading as a whole using so many different, like, you just need an edge, right? Like, I remember there was one, I don't know who they were, but I think they were from South Africa or something, but some company, some institution, some trading floor, and they had this really simple strategy. I can't remember exactly the entry requirements on that, but it was a very simple scalping strategy. But one of their main rules was if the trade is not in profit within, I think it was like within 1 minute, they close it. Regardless of what happens, they're closing that trade if it's not in profit within 1 minute. Because statistically, they did some analysis and they found out that if a trade is in profit within a minute of entering, it has a much higher probability of actually making money. They did some like long data analysis, and they had this strategy that basically was based purely on time. And
wow,
their win rate was like 30-something%, but they made an absolute killing because they would place the trade, wait 1 minute. Is it in profit? No, get out. Place the trade, wait 1 minute. Is it in profit? Yep, get in. Like, it was crazy, but they made an absolute killing doing something like that. So even like the tiniest bit of information that shows you have an edge can, if you use it correctly, like you can make a lot of money. Like you can actually do very well if you're very strict with those rules.
And
for sure. And I always like to bring up, like, you know, just having that data. I think we were talking about earlier today about journaling, but whether you're using MyFX book or any type of journaling software, you always want to be able to look at that profit factor, right? That profit factor is going to help you out a lot to be able to tell you, like, all right, do you have edge? If you see your thing is at like 0.30 or something, you might want to do some more tweaking. You know what I mean? Seriously.
Absolutely. Yeah, definitely. And having edge, like you have first to build an edge, and when you start, so all your work should build an edge, and you should stick to this edge. And what I say when I'm talking with other traders is just have an edge, put it in a trading plan, and just execute based on it. And let's say judge yourself based on a sample of trades. Don't judge yourself based on 1 week, 2 days, 3 days, 4 days. Just a simple. Take a big sample. Let's say 50 or let's say 40, 60 trades, and then you will have enough data to, let's say, to say, okay, I will focus on this. I will take this. I will so yeah, having an edge for me. I don't know for you coaches, but for me, like having an edge is the first thing before psychology. I don't know. Maybe we can agree.
We just spoke about this earlier today. Yeah, okay, it is. Because you can have risk management, you can have psychology, you can journal your trades, but if you don't have edge, none of that matters. It's just a slow death. You're gonna eventually blow your account. Number one is edge. That comes first. That's first and foremost.
Yeah, absolutely. Absolutely. The two go together hand in hand. Yeah. Like one without the other, just you need them both to be profitable. 100%.
Yeah. And like about the strategies, for me, like there is no right or wrong. Like what work, what give you money, what work for you, it's right. So if this is
like I said, there's been people who've made hundreds of millions, right? On the tiniest bit of edge on based on like one little bit of information, essentially, like one little bit of edge, and they just execute it correctly because they're really strict with it, right? Like what was his name? I forgot it. Richard Dennis, the turtle trader system or whatever, back in the, I think it was like 80s or something. Right? He took a bunch of newbies, people who've never traded before, told them one simple strategy, gave them defined rules, right? And they ended up making, hundreds of millions in that hedge fund. So, like, I'm not saying that strategy works today because the markets have evolved since then. I think that was like a simple breakout strategy, but nonetheless, it's the structure within it, right? That made it successful. It was, it had an edge, it had all the pieces of the puzzle put together by someone who was very good at managing people, and it worked. I think a lot more people would be successful in trading if it was more like a traditional company, right? Where you had a boss who would tell you, right, you got to do this. It's your checklist. Because then they can't mess around. You know what I mean? They're not going to make silly decisions. If someone is literally telling you, these are the rules, don't break them, or you're out in the street.
Yeah, and
they will follow a lot more.
Yeah, and I love yeah, go, Michael. Sorry.
I'm sorry. I was gonna say it's something about that, right? Like how is it that you know what you're supposed to be doing, and you know this, and you've taken so many losses before, but for some reason you still break like your trading plan, right? Like, you know you weren't supposed to get out, you know you were supposed to move your stop, but for some reason you keep doing it, and you get aggravated, and you're like, oh, this is the gazillionth time I've done this. Like, I tell people all the time, like, you're not the same person when you're in the trade. Like, you go berserk. It's like the monkey brain just takes over. That's why you have to have a plan before you get in the trade, and just be a robot and be dumb to your plan, basically, right? Just stick to the script, follow the plan, and don't try to make in the moment decisions, because you're literally not thinking correctly, right?
Yeah.
You're just, emotions have taken over you. You're doing stuff that you would never do. It's like you're a smart person when you behind the screen, you click the mouse, you turn into a monkey, and then you just clicking the things and stuff. And then once you off the trade, you turn back to yourself. You're like, what just happened? Yeah, the monkey brain took over.
like
Once
another
again.
person. Yeah.
So true.
So like about this, like a lot of new traders came to the market with the idea of free, like he's free. But when you are, for me, this is wrong. Okay, you are free, you work from home, you wherever, from Brazil, Mexico, but you come with the wrong idea. I am free. You are not free. You have to respect those things. You have to respect your trading plan. You have, you know. So even the freedom in trading, like it's not a good how the new trader take this concept, like of
it's a facade. The word is a facade. Yeah. It's a facade that they're free and they're really not. You're a slave to your trading plan. At least you should be.
Yeah, and you never stop learning. This is the important thing. I think with trading, the moment you get comfortable and you just think, I'm set for life, the market's gonna slap you around the face and wake you up again, because you got to be on your feet and on your toes at all times. You can't just relax, click a few buttons, make money, drive a Lamborghini. It doesn't work that way. Like, you have to adapt and constantly. But people don't want to hear.
That's what the market says. Hold my beer. Yeah. Hold my beer. Let me. Thou shall humble you for thinking that.
You know what? There was something really interesting I was watching. It was about like these guys who do card counting, right? And it gives you like if you do it correctly, like there's a certain way to do it. I mean, you got to be like really smart or something, but if they do it correctly, they get like a really tiny edge over the casinos, right? We're talking like maybe 1%, I don't know. But what they do, although it's not illegal, like it is perfectly legal to count cards, but casinos can stop you from doing it. They can kick you out.
It's not illegal, it's frowned upon. That's what it is.
So these guys, they just go around to like every casino that they like, you know, they travel out of the country, wherever it might be, just to get time at a table. And you should see their equity curve. Like, it's similar to trading in that respect. But they're so like they have days where they lose huge amounts of money because they can't control what cards come out the deck, right? But they know as long as I have enough hours on the table and I stick to the plan, mathematically, that edge will present itself on the overall balance. And it always just naturally corrects itself over time. And these guys make a killing. We're talking millions over a tiny edge. And that's how
I think I've seen that movie. It was a movie with Kevin Spacey. I think it was 21 or something.
Oh, no, I'm talking about on YouTube, but
This movie about that too.
It's all about this moments or this time when you are in drawdown, like you are waiting for your edge to play out. So if you could control just this, sometimes couple days, sometimes I don't know, couple weeks, that's it.
That is exactly it. Like the edge will mathematically play itself out. You just have to don't give up the moment like you have one bad day or something. Be like, this rubbish, it doesn't work. On to the next one. You know, that's
got to think in probabilities, as Mark Douglas says, right? And take a large enough sample size. Think in probabilities.
Yeah.
Because if you take 100 trades and you know your system is 60%, which is great, right? You're going to end up winning long term, but you're still going to lose 40 times out of that 100. Now, when you're going to lose that 40, no one knows, right? So if you lose 25 in a row, you can't say, oh, this doesn't work. That's not how it works.
Yeah, absolutely. But guys, that is time. We've hit time with the session. Aymane, it's
Yeah,
really good. Michael as well, thank you.
thank you.
It's been a pleasure.
Absolutely,
It's been a really good session.
Yeah, pleasure meeting you. Thank you,
All
guys.
right, guys.
And thank you to all the viewers as well. We'll see you soon. Thank you, guys.
All right.
Bye.